1.9 million as detailed below. It says the supplier name, Smart Business Group, invoice number is detailed, is there, description of cell phone is Samsung Galaxy A71, amounting to 720,000. And another one also says Smart Business Group, the same supplier, and invoice number is detailed, purchased of 70 pieces Samsung Galaxy A51, amounting to $1,260,000, total to $1,980,000. It is explained that a single supplier has responded from your management response. You've sent the notice to a lot of the suppliers, but only one supplier has responded. But then it's not explained whether that supplier has met the criteria, and under which criteria did you award this contractor?
Thank you, Honorable Member. The supply of mobile phones, as you rightly mentioned, was done through a normal procurement, as quotations were solicited from local companies. And this particular company, Smart Business Group, happened to be the most responsive. And why they were in two categories, because the beneficiaries are also targeted to be in categories in terms of senior management and middle management staff. So that's why there's a difference in the type. But the procurement went through a solicitation of requests for quotation from four local companies, and Smart Business happened to have been the most responsive. And the item is classified under donations in the budget of the GPA. And the other corporate item that there was only one bidder. Also, quotations were solicited from 4 bidders, but only one responded. Mm-hmm. And it happened at a time when these items were needed by management for end of year traditional gifts, and management was obliged to proceed to award the contract, and the amount was within the threshold that is allowed for RFQ, request for quotation.
All right. Were these mobile phones loans?
Thank you, Honorable.
Loan to staffs?
No, Honorable. They were gifts, end of year gifts to staff, senior management and middle management staff.
Okay. Chairman, under it says that this procurement was not justified as there was no budget line for the expenditure or approved from the board. The management did not provide the list of beneficiaries to confirm who received the mobile phones. Furthermore, as highlighted in our prior year management letter, on a similar observation, we have not been provided with any documentation or documentary evidence that permits the authority to pay such incentive to the aforementioned beneficiary. And in instance was not for the purchase of corporate items amounting to $491,250, where only one supplier responded to the request prior for request for bids. The Internal Audit Department suggested that for more quotation to be obtained. However, this was not done. In line with Ghana Procurement Regulation GPPA 2019, that states for procurement goods of 20,000, approval should be sought single sourcing by a purchasing party. It means that this thing hasn't got a budget line approval, neither it got the blessing of the board. So how do you manage to procure such items? Thank you.
Thank you, Honorable Member. The response as indicated from the management is that there is a line item in the approved budget called donations. So this procurement is classified under donations because these are gift items to staff members. And for the corporate item, that there was only one single bidder. As I mentioned, the request for quotation was sent to 4 bidders, but only one responded.
Okay.
Wait, thank you.
List of beneficiary. Were you able to provide the auditors during period under audits? Who are the beneficiaries of these items?
The auditor's statement is correct that they were not provided, but I want to inform this Honorable Assembly that always the people that receive these gifts sign against their names, and the list is available in the GPA records.
And issue of you said you have a budget line item called what? Donation.
Donations, yes, Honorable.
And it is under that vote that you tap to buy these mobile phones.
Yes, Honorable.
Were you able to establish that with the auditors?
I can't confirm at the top of my head, but the management response has indicated that the auditors were informed that this is the line item which was invoked for this purchase.
Auditor, do you have anything to say? Is it in line with best practice? It's not in line with best practice to give gifts to senior management. Okay. Yes, Chairman, you want to respond?
Yeah, and I should also say that it was picked by the board and made clear that it wasn't supposed to happen. A budget allocation does not necessarily mean that it can be spent either way you like. So, but we've made progress along these lines. That is that our budget is going to be informed by what we intend to do. We don't allocate money and allow it to lose. We have to have the activities first, and the board would approve the budget, and we will know what the money is going to be spent on. So we hope that would address some of these lapses. When we realize that's what happened. So now we have to have our activities clearly identified in the form of a work plan, and that would inform the budget. So the board, when the budget is approved, we will also approve what is going to be spent on. We're not going to have a budget line called donation. We will know what type of donation, if necessary, even to whom, before the donation is actually given. We are not giving actually they don't have the management doesn't have the authority, and we are not going to allow such to happen moving forward. But it did happen. Yeah, but moving forward now, that loophole has been closed. Let me put it like that. Thank you.
Yeah, Chairman, I think we need to understand that there are two things involved here, and we need to dissect it, for the purpose of accountability or clarity per se. We understand in budgeting you have a vote from line vote A, you via it to vote B. In case there is budget deficit or there is no fund, you understand? You can via from, let's say, travels, you via it to maintenance of whatever. But what the audits are now querying is that the expense is not what that is explained from the expense budget now. That is still the issue here. And as you agree with me, or the DG agree with me that you don't budget donations to come and then give it to people who are also in service again, giving monies to people in senior management position is really uncalled for. Yes, can you make that clarity? Because two things, you vary from one budget entity to another budget entity. That's understandable. But in the expense account now, is what the auditors are now asking for. Back to you.
The point is noted, Honorable, and we will take it back and ensure that the practice is remedied.
So if it is above the threshold, it has to seek approval from.
Yeah. Just lastly, are we together?
Yes, Honorable.
Okay. Looking at the 26 December 2020 Smart Business Group SL 118-3894 purchase of 70 pieces of Samsung Galaxy A51. It also violates the GPA procurement rules because it's above the threshold of RFQ method. So, which means it couldn't go further without getting approval from the board. So it appears that you guys have proceeded and then implement this thing without getting the blessing or approval because it's above the RFQ. What is your response to that?
As I said, Honorable, the points are noted, but at the time, I believe what may have happened is that the procurement processes were followed in terms of the RFQ. But at the actual time of purchase, I don't want to make a statement that I cannot corroborate, but it usually happens that the amounts are within the threshold. And in distributing the items, because these are lists that are compiled, we have the situation where we have to go for additional phone sets because people will come back to claim that they were omitted or they are given the wrong category. Because I remember this has happened, but I will take note of.
So, are you confirming before the this August standing committee that it's within the RFQ? Can we have members from the GPPA?
When it comes to
Director.
Yes, thank you, Honorable. As I mentioned earlier, that I don't want to make statements that I cannot corroborate, but what I believe may have happened, because I am aware about the way the transaction was handled, is that if the amount is above the threshold where it is more than 1 million, as rightly mentioned by the subject matter specialist, we would always go for GPA approval. So I will cross-check, but nonetheless, we have taken note of the concern, and we will remedy the situation. But on this particular purchase, we will do further investigation and then provide feedback to the Honorable Assembly as to what may have really transpired.
Thank you very much. And we also want you to desist from practice. These are not really in line with best practice. To create a budget line item, purchase of funds to senior managers. Chairman, we want you to please take note of that. It's serious. Thank you. Huh? Okay.
yes, come in, Cisse.
I want to ask, on which basis did you give these funds to? Is it because at the end of the year you feel that senior management teams need to have a cell phone, or you've awarded it to them depending on their appraisals to say they've performed very well in the past year and you give it to them, or at the end of the year, I think our senior management teams should be given something, you give it to them. Based on what has these funds been awarded?
Thank you, Honorable. It's just a gift item for motivation to all managers, senior managers, directors, and all the senior management staff.
Even if anyone who doesn't perform, so, but we need to give the phone to the person.
Yes, it's for all the senior management staff that are on post, that those are that within the jurisdiction, so to speak, and are working. So it excludes people like who are on training or on study leave. So for people who are in active service and are within the jurisdiction at the end of the year, that has been the management practice to accord them the mobile phones as end of year gift.
Okay, I want to make a recommendation in terms of for us to avoid the issue of having a budget line called donation. Why not you try to create those incentive package that go along with the person's office? That once a director of these departments, we have some incentives for you, and the incentives are X, Y, and Z. That is more practicable than an all institution creating a budget line item called donation. We're expecting donation to go to the vulnerable people, but not people in office. I was thinking that it's part of your, do I call it corporate social responsibility, that you use it to give out to people when, anytime you are approached, per se, as your corporate social responsibility. Thank you.
Points noted, Honorable.
Okay.
Yeah, I want to ask a follow-up question regarding this. Regarding the purchase of the mobile phones, is it still part of your budget line, the donation that these funds were bought from?
Yes, Honorable. They're bought from that budget line called donation.
Are you still buying gifts for your employees?
Yes, the decision has been, because these were annual.
Yeah.
So the management decision was to make it once every 2 years rather than every year giving the gift. But as we have had the chairman authoritatively making the statement that the practice has been stopped, then that is what we will go by.
So it is now stopped. Instead of 2 years, you mentioned like it was yearly. After it was agreed that it would be taken to 2 years each before gifts could be bought for employees. But now I heard the chairman say, a different version of having all these gifts scrapped out of your normal year routine. I don't know.
No.
Let me explain.
Yes.
The fact, as you can see, it was not approved by the board.
Yes.
It is clearly stated by the audit. Yes. And we don't expect that to continue. So now I said the budget is informed by what is going to be done. It's not that you have a lump sum money put or called donation that can be spent by the management at will.
Now, what we are saying now is henceforth,
right,
buying gifts for employees at the end of the year should be abolished.
Yes. But there is something my colleague just reminded me of. Normally, there was also the communication aspect with the staff. Okay, from my former employment, I was given a cell phone for work purposes, not as a gift. But then, in this case, it was given as a gift, which was not approved by the board. And we said, no, it cannot happen. It cannot happen. If they want, they have their own phones and they can use it, but there are those who are given cell phones for work purposes. So we have to solve that issue. But to buy it from donation, that is, because this is an equipment. It is what we called, you should be able to put it as an asset of the organization. And maybe over 3 years, you will depreciate it and renew it, but for work purposes, and it's not for everybody. It depends on the state.
I
so
think
we'll
for
have
that,
to look at it. We have to look at it from that angle. But as a gift, that is a no.
It's abolished.
Yes.
Okay.
Everything that is spending money that's not approved by the board at that level is abolished.
Since when? This was 2020.
This was 2020, yes.
Yes. Since when was it abolished?
Well, no, now we're in 2022.
Starting from now. Or
Excuse me, yes.
Yeah, this year was the last time.
Order. Chairman,
yeah.
Since this particular procurement was not approved by the board, which means it should not have been done. And I just want to inquire from the MD, do we still have this budget line called donation?
Yes, Honorable, it still exists. But
Yeah.
like I said, if the statements that are coming from here, they are authoritative, and as the chairman mentioned, once the statement is that it should be abolished, it will be abolished.
So since, what is the whole purpose of that donation budget line? Since this one has been discouraged and it has been abolished. And going forward, we have to be extra careful. And the role, Mr. Chairman, the role of the board is to conduct oversight on the institution. And this type of issues should not be encouraged. When they are not subjected to your approval, it should not be entertained. And you have to do everything humanly possible to avoid them. So I want to know actually, since this has been completely out of it, what is going to be the fate of that budget line? What is it meant for, other than giving donation to staffs? As he rightly said, because we expect donation to be given to deserving, needy people. So, but if that is abolished, what is going to be the fate of that budget line?
Well, thank you, Honorable. Yes, the donation vote still exists in our budget, and it's for needy and less privileged members of society, and it's based on the merit of the applications.
Okay.
For orders that are already predetermined, those are given a specific line item. But the donation is lumped, but there are other corporate social interventions that can be predetermined. Those ones are clearly spelled out as line items.
Okay. Thank you so much.
I just want to make this observation. That managing director said the words that are coming are authoritative to say, to abolish. I just want to observe that. They are not being authoritative. Just to make that clarification is very important, because this is on record. That are, we are making suggestions as to how we can have a better institution. It's not, to impose things on you. But then this 1.9 million or 1.8 million could have taken some of your staffs to the university up to, they have a degree. 2 or 4 or 5 of them can have a degree from this 1.9 million. So if that's going to a cell phone, at the end of the day, that's not something that is very material. So this is why we are saying this, for us to have best practice for it. And what is the dictate as part that allocation? What is it meant for? Is it meant for this? No. Then let's abolish that one. But we don't want to make authoritative statements, and that's not good for us too. So I just want to observe that.
Thank you, Honorable. Well noted. And apologies for that assertion, but it was meant for the board, not the Honorable Committee.
That's my question. We now move away from that. We go to number 21, page 21. Yeah? Page 21, 4.2, where you have confirmed payable balances. Yeah? You are there. Yeah, it states we also noted a difference between amounts confirmed by suppliers and the amounts recorded in the general ledger for the payable below. Name, MAN diesel and turbo. You have a difference of the balance as at 31st and the confirmed balance, a difference of 519,023.99. And the same thing continued for GAM Petroleum and the Calma West Africa, a balance of 2,082,474. This is a very high-risk area. Can you elaborate on that?
Thank you, Honorable Member. I would invite the Senior Finance Manager. But what I know about these transactions is usually it's a timing difference.
Okay.
By the time you receive the goods in store, it may have lapsed to the next year. That may account for some of this difference in terms of timing. But I will invite the Senior Finance Manager to elucidate more on this particular, with your permission.
Thank you. Yeah.
As the managing director already alluded to, I mean, these things do happen between, I mean, December and January. It's a short period. I mean, when goods are, I mean, ordered and they come at that time, because of the short time to the end of the year, there is this timing difference. I mean, the goods will come, we recognize it in our books. I mean, and then at the end of the year, I mean, we may not recognize it in our books by the time the goods came, but then the supplier has already recognized it. So we may recognize it in the next year. So that is what is causing the differences, if I'm understood. It's mainly it's caused by, at the end of the specific period, maybe by mid, I mean, the following month, if you look at the books, the differences will not be there. It is as a result of, it was first captured by the supplier before we capture it. This is the difference.
Okay, I want to believe that in every audit exercise, there's always entry and exit meeting. And I know in the exit meeting, you must have that discussion with your auditors to make sure that this is resolved. But were you able to adequately explain to them that this has happened?
I believe it had happened. I strongly believe we have discussed this thing.
Can we hear from the auditors, Madam Secretary?
Yeah, definitely. Because it is stated here, the difference noted between the general ledger and the confirmed balance indicated that payable balance reported in the financial statements could be misstated and frequent reconciliations are not carried out. This is what has been mentioned.
What is the status of
this
one? Are they resolved up to now?
Yes. I remember, it was resolved.
Okay.
It was resolved, definitely.
Can you provide evidence?
Yes, we can.
Okay.
Okay.
Yes. Mr. Chair, I want to ask, how is the reconciliation done? Do you have is it your senior finance officer who does the reconciliations, or you have separate staff in the department who does the reconciliation? Do you have reconciliation officers, or this is fused into the functions of somebody?
Yes, honorable member. I mean, some of these supplies are allocated to specific people to do, let's say, man diesel, and some other, I mean, suppliers may be allocated to a person. You know, we have so many suppliers, so that is how it happened. We have different staff who are responsible for different suppliers, and they do the reconciliation. When they do the reconciliation, they bring it to the more senior staff to check and verify before it is finally, I mean, put to rest.
Okay, that's a good practice.
Can we go to page 22 where we have loans? 4.3. From our review of the authority loans outstanding as at the end of the period under review, we noted the following. 4.3.1 ADB loans reported in the financial statement is a balance of 248.5 million relating to a loan payable to ADB as at 31st December 2020, as per the repayment period stated in the agreement, provide for our review, this loan should have been fully repaid as at December 2017. A revised agreement with the borrower was not provided for our review, and we therefore could not confirm the completeness and valuation of the loan balance. Furthermore, we noted a difference of 2.507,217.56 buduts between the amount confirmed, Ministry of Finance and Economic Affairs, and the amount recorded in the general ledger for the loan balance below. So if you come underneath, you have the table here, and there is a difference. That's ADB third port. Okay, this 2,507,000. Then you have 4.32. That's Damen Kankujeri loan. We noted that the authority did not recognize interest expense on the Damen Kankujeri loan amounting to 8.4 million. 4.3.3 Damen Kunta Kinte loan. We also noted that the authority did not recognize the interest expense on the Damen Kunta Kinte loan, amounting to 10.3 million. So in your response here, the management response, the Ministry of Finance and Economic Affairs is still being engaged to provide the confirmation to external auditors. Damen Kunkujeri loan, the interest of 8.4, and Kunta Kinte. But you are still following with the Minister of Finance to take it up with the external auditors. How is this done, and what level are you?
Okay, the difference between the two figures is mostly because of revaluation, because these loans are denominated in unit of account, UA, and it is loaned by ADB to government, and then government on lends to the GPA at a premium. So anytime these biannual payments are due, they do like a valuation exercise, and this all because of the exchange difference. That's why there's this difference in the amount. But as we speak, the balance is much lower than this, because there's an accelerated repayment that has been agreed, and this was sanctioned by the Board of Directors to offset the amount, so that we now have an agreement with the Minister of Finance that the loan is denominated in local currency, in dollars, and there's a fixed amount, and we're accelerating the repayment to offset it. But that was the reason for the difference. For the Kankujeri and the Kunta Kinte ferry, part of the loan agreement with the shipbuilder had an interest, and our accountants were treating it this way, because it was not like the GPA is purchasing outright this craft, but the shipbuilders, Damen, they too took a loan to finance the shipbuilding contract, and that loan was at an interest, and it was part of the contract that we signed. No, I think the query about the auditor is the accounting treatment. But Mr. Jom can shed more light, but these amounts are in the contract.
Yeah. What happened is, at the beginning of the purchase, the interest was capitalized. So as a result, we couldn't expense it. The problem with us and the auditors is, it should have been expensed, not capitalized. So, and management is saying, is still adamant that it should be capitalized. So this is the difference that is between us.
MD, you said you are in progress in terms of the loan recovery. In terms of percentage, can you provide us how much is left?
At the top of my head, the balance should be around 111 million now remaining, because we have been doing biannual repayment of about $13 million. Every 6 months we pay $13 million. But it came at a point that the board decided, because the port is envisaging to go into some PPP concession with private partners. And also because of the adverse opinion, it's trying to clean up the balance sheet. And some of these things are instructions coming from the board that we have to prepare for what is going to come, to make sure that all these encumbrances are dealt with. So part of the arrangement with Ministry of Finance is to accelerate the repayment and also to denominate the balance in Gambian dollars. So as we speak, about 110 million is what is remaining out of this 248 million. Yes, we have exchange correspondence, and it was approved that we denominate the balance in local currency rather than leave it in unit of account, UA, which anytime that the repayment is due, you have to do evaluation. And that's why there is a concern that in actual fact, we may have even repaid this loan over time. Why? But because of the exchange, every 6 months you have to pay, you have to do the exchange calculation. That's why there's a huge difference in the exchange loss. So that's the concern. That's even why we have been engaging Ministry of Finance over the years, and it has been a perennial issue, but thankfully it is now resolved.
Come up with it.
It's okay.
Right, Honorable Chair, I want to take the guidance through page 24 of the management letter, revenue. Are we there? It says, during our review of the authority's revenue general ledger for 2020, we noted debits amounting to 5 million relating to debits rebates. It's rebates granted to customers on throughput. So it is saying 5 million, and it also further stated these are deducted from revenue instead of separately being accounted for as discount allowed. And it says furthermore, we were not provided with the list of customers that benefited from these discounts or the evidences of approvals for the discounts. And I'm looking at the sufficiency of management's response with respect to this query that has been made, so that we link it to and move on. It says, accounting for rebates. It says, rebates are granted to shipping agencies as per the tariff and rates regulations based on a level of tonnage achieved during a particular year subject to management approval. But then subject to management approval, this is how it's supposed to be done. But then the complaint here is that this was not subjected to an approval before being done. The evidence of approval or discount was not provided for. So, and your response as management is telling us that it should be subjected to an approval before it's been carried out.
Remember, the accounting for these rebates, before a credit note is passed, it is approved by the office of the MD. However, the accounting aspect of it, that is debiting revenue, has since been stopped. This year, in the accounts, you won't see such. We have created codes for discount and rebates, where all these discounts are posted, and then the revenue, posted intact.
So why hasn't it go through an approval?
It goes for approval.
So why?
Any such I mean, how to call it, credit notes, before they are passed into the accounting system, is approved by the office of the MD. Then before we post the journal or do anything.
So why wasn't the evidence of approval provided for review?
Anyway, this may not be, I may not recall exactly, but I know, I mean, it has been approved. And
So
I
do,
can, and I
do you
can,
have evidences of this?
I can produce the evidence.
Well, why wasn't it provided for auditors' review to make their work easy for them?
Anyway, the point is noted, and then definitely, I mean, any credit note before it is passed into the accounting system, it is approved at management level, and then journals prepared and then posted to the system. That I know for sure.
Honorable Chair, can I ask the auditors what were their challenges in accessing these approval evidences?
Yes, of course.
I want to ask if the auditors can help us with whether there were any challenges, in request of these, approval evidences.
Okay, let me bring you back. We are still on the issue of the accounting for rebates. Auditors have done their work, and then they have come up with a recommendation, and it appears that it's very high. That is, the implication is very high. And implication, it says that the absence of board and relevant authority approval implies that the management is making decisions without approval of the board of directors, who have fiduciarily duty to represent and protect the authority finance, resulting in loss of non-operating total revenue by 129.3 million. In essence, auditors has done their job, and they have flagged that there have been several attempts to just do it without following due process. One is revenue losses, and two, ineptitude in terms of respecting the hierarchy or organogram of an institution. That's what the member is trying to say, that what we are informed by auditors that it hasn't got auditor's approval, unless you want to give us otherwise. Yeah.
Thank you, Honorable Member. The concern is noted, but the issue of waivers, this has been a management practice of granting waivers on this show handling rent on empty containers. But since 2018, because of the amounts involved, the issue has always been taken to the board of directors for decision. And what the auditors were asking was the minutes of the board meeting to show that the board endorsed these waivers. Why management decided since 2018 to bring it? This has been a long practice of granting waivers on rent on empty containers to shipping lines. Because the clamor has been, because of the congestion, the containers that they identified to be shipped out, we could not access that because of the congestion. And the tariff is incremental. It has no threshold. So the longer the container stays there, the more the charges accrue. And the shipping line's argument is, it's not a business sense for them to leave their empty containers there, because once they are empty, staying here, they are not earning money. They could have shipped it out and then earned on the freight. And the amounts were in excess of 25,000 euro for one 20-foot container. And their argument is a 20-foot container, new one, would cost 3,000 euro. So why should I pay rent, storage, 25,000 euro on an equipment, when for the same amount I can buy 8 new ones? So that has been the challenge. So management, based on that, has been granting these waivers. But since 2018, because of the amounts involved, the decision has been always escalated to the level of the board. That's why it is being reported. Thank you.
Thank you very much. It really shows that there's a problem in terms of handling these empty containers. What is the management doing currently in terms of addressing the menace, so that this issue of empty containers would not be lying down there and accumulating some fines or penalties, so that we can get rid of it?
Thank you, Honorable. I think that was why the conscious decision was taken by management to escalate the issue to the level of the Board of Directors. Because to waive amounts in excess of $100 million would need a policy decision. But the issue has now been resolved as we speak, because the board has sanctioned that a definitive end has to be put to this, because every year coming to the board to ask for waivers, it's usually a very difficult decision and a difficult exercise, because the claim from the shipping lines is that it's the port that is now punishing them for the port's own inefficiency. Whereas in the level of the board, it is that these are monies that are due to the authority. So that's why usually an amount is considered as waivers, which the shipping lines even challenge, because their request is not to pay. But no, the issue has been resolved.
Yeah, my concern is that if you have so much of pile of empty containers there, is it not making the port very, very tight to operate, and issue of a ship is standing, waiting the sea, cannot bat or cannot try to, offload containers here and there. I'm speaking that line. How do we address it so that there is more space? I know that you are currently working on expansion program, but empty containers has been menace of the port to get rid of them. Yes.
Thank you. One opportunity that the port has is there is a owner of a private facility at the Bond Road, which the GPA has been renting from the owner. But the owner has developed the facility to the requirement that satisfies both GRA and GPA. And instead of GPA now renting the facility to keep empty containers, the operator has now what we call service level agreement, SLAs, with the shipping lines. So that burden is no more on the GPA. Now shipping lines have that agreement with the owner that the empty containers will be kept there and they will be brought into the port, evacuated to the port, only when it's time for shipment. The impact it has is that it has impacted positively on the operations of the port. By January this year, we had ships waiting time in excess of 24 days. By April, it dropped to 14 days. And by July, we had less than 10 days, except for September, when the ship waiting time went back to 17 days. And this was as a result of, there were incessant rains during the September month, heavy rains during a 2-week period. And we report these figures on monthly averages. That's why the waiting time has gone up. But Honorable, to be certain, the facility at Bond Road has impacted positively on the operations, because this has now resulted in ships waiting time going to below 8 days. In fact, vessels come straight to berth in some occasions. It's as a result of the empty space being used now at the Bond Road. So it has freed up space within the port, and this has had an impact on the productivity to be improved at the port. So there are positive signs that going forward things will improve.
I want to ask if you are saying the facility around Bond Road is privately owned.
Yes, Honorable.
And is this on the sites of ports?
No, Honorable. It's owned by SMG.
Let's go to page 28, where you have observation on impaired assets. The internal audit team carried out a physical verification of authorities' fixed assets and noted assets that had been demolished or not operational. We confirmed that these impaired assets had carrying values amounting to 36,900,000. Yeah, that's 36,900,000 or 36.9 million. And impairment charges were not made. One, the value of these assets in the register are as detailed below. You have 1,800,000, 11 million, 2 million, 5 million plus 11.8 million. Total amount goes to $36,890,642. Why these things are not registered?
Thank you, Honorable Member. As you can see in the management response, this was an internal issue that we had, that the finance department were not adequately informed by an estate department, which was handling, these assets. These were old sheds that were in the port, but because of the congestion, we had to demolish them and use the space because we needed more open space for containers. And some of the items were portal. But I believe the issue may now have been resolved because at the time of reporting, accounts department did not have the information from the estate department as to how these assets for them to be recorded. It was purely an accounting treatment that we accept that the breakdown in communication was internal.
You mean you demolished the structures there to give space?
Yes, Honorable. So it was not treated as to be because the people handling the demolition exercise, what was expected is for the estate department now to write to a memo to the accounts department telling them that these assets should be removed from the register because they have been demolished.
Okay.
What is the status? Can we hear from the finance director?
Yes, honorable member. As the MD already alluded to, the assets were recognized to have been disposed in our books as we speak.
Did you communicate that to your auditors?
Yes, I'm sure it will not. It will not
appear
in our current accounts that is being audited in 2022.
Yes, it's saying that did you communicate to the auditors to agree in term that we've agreed to dispose these things?
No.
What he's trying to explain is that it will not appear in the 2021
it will not
audit.
appear in the 2022 accounts. It has been fully, recognized in the books.
Okay, you've reconciled that?
Yes.
Okay.
And then the
recognized in the fixed asset
sorry.
register.
Yes.
Okay.
That's what I'm saying, that it might come back in the 2021. But what is also happening right now in the GPA is that there is a asset valuation that is current, and a revaluation was conducted. And the report was submitted, but there were some gaps, and which we have addressed. In fact, currently, what is compelling the authority to come up with a revaluation is the anticipated PPP option that the port is envisaging. And these are things that we will need to have in place before we can even consider to engage a private partner for investment in the port.
Okay. Thank you. I think let's go to page 30. 4.7, equity investment. During our review of the authority equity investment, we noted the following exceptions. Trust bank investment. We also noted a difference of 5.8 million between our expected value of the trust bank equity investment and the general ledger as detailed below. So the table below shows the tabulation. We noted a difference of 5.8 million between our expected value of the trust bank equity investment and confirmation received as detailed below. You have the description, and in your response, what trust bank confirmed was the number of shares and not the value of the shares, while the value of the investment as per GPA record was the cost of acquiring the share by GPA. The absence of stock market locally rendered the market value of the shares not readily available. What is the status?
Yes, honorable member. We have since recognized this issue and has been corrected in our books as of now.
Okay. Let's go to page 32. Outstanding informations. Information.
Confirmation.
No, I mean on top. Outstanding informations. Then observation 5.1, outstanding confirmation. 5.1.1, payable confirmation. As part of our audit procedures, we send confirmation to sample of the authority creditors to confirm balance due to them as 31st December 2022. We are yet to receive payable confirmations from the list below. That's TK Motors at a tune of 13,185,000. Then you have Mukhtar Holding, that is 1,299,684. You have Quantum Net Express Motors, 1,920,000. You have Share Gold, 4,568,968.30 buruts. Share Gold again, 2,643,320.30. And FEMC, 228,804.89 buruts. 5.1.2 receivable confirmations. As part of our audit procedures, we send confirmation to samples of authorities receivables to confirm the value of this balance as at the end of the period under review. However, we are yet to receive receivable confirmations for the list below. Then you have George Banner, 6,605,657.66 buduts. Jar Oil, 20,232,761.66 buduts. Nawek, 4,935,159.44 buduts. Saibe Emadi, 4,497,963.79 buduts. Gambia Ferries, 338,879,454.99 buduts. Interstate shipping, 33,061,235.6 buduts. You have MSC Gambia Limited, 23,067,129.87. Going forward, you have 5.1.3 equipment confirmation. Then also you have NAWEC, investment value of 1 million, Gamtel 600,000. Total nominal value is 1.6 million. In your response, the payable confirmation, the GPA will continue to make a follow-up with the supplier to have the confirmation forwarded to the external auditors for review. Have you made that?
Mr. Chair, it is very, very difficult to get confirmation from suppliers. For the local suppliers in the Gambia, I am the one responsible. And the overseas suppliers is the Deputy Director of Finance. Even the current auditing exercise, we are still yet to receive confirmation. And I would call every other time, daily or weekly, to make a follow-up. They would say yes, we'll do this, and they won't do it. We are doing all humanly possible to make sure that we get confirmation. Some of them who confirm will tell you, send us the balances you have, then we confirm. You know, at the end of the day, you have to do that. But others they don't just respond. So this is the challenge we have. We do follow up. Even the current budget, we are still following. Even as late as yesterday, I was doing this, but we have no response, positive response up till now. So this is the challenge.
Okay. I believe these are monies that you owe to these people. Yeah, receivable and
payable, yes.
Yeah. So the payable ones now, you still have issues for them to come and confirm with you that you owe them.
Yes.
And they're not
For
coming.
them to confirm is a problem.
Why? Did you?
I wouldn't know. I wouldn't know, honestly. You write, you call, you do all sorts of things.
Yes.
Yes. For payables, have you ever received a request for the payment of these payables? You receive a request from them for you to pay this. These payables that you have on the list, have you received a request, a correspondent that came to you?
Them. But the auditors want to confirm the figure that they have with ours. We know the invoice, we have the invoices.
Okay, what we want to establish is whether you really owe them. Because you have,
We owe them.
sometimes, do they still supply you with goods?
Yeah, they do.
But you are still owing them and they are still supplying you with goods.
Yes.
And when you owe somebody this handsome amount of money, an international supplier, you did not pay it and they are still supplying you. You send them.
We are paying. They are just confirming the we are paying.
What I mean is, these are payables which are supposed to be paid, isn't it?
Yeah, exactly.
It means you still owe them this outstanding balance, isn't it? And but they are still supplying even with this balance.
No, this balance is no longer, the same figure. This was as at the time of the
Audit. Exactly.
Or as at 31st of December 2020.
So has any amount of this been paid?
But yes. This figure may have even changed on the 1st of January the next year.
I'm looking at, let me say this, please. Like some payables, because you cannot be following somebody to say, come for your money. If the person doesn't owe you any money, the person will not come.
Issue of, come and receive your money is the issue of confirm the figure that we have. Is that the figure with you people? That's it all. For them to confirm whether what we have in our books is what is with them. It's not the issue of common pay.
Honorable, I understood. Please give me some time. I understood. I understood very well. They're supplying you goods and you pay them. So this payable is telling us they've supplied you and you did not pay. This is what the payable means.
What it means.
Okay.
End of 31st December 2020.
Okay.
That is the amount of money that we are supposed to pay them. But that figure you are seeing may have even changed on the 1st of January because we may have paid.
Honorable, let me make the occasion on that.
I'm going to help you.
Yes, I'm saying this. As at 31st of December, these are monies that's supposed to be paid to the suppliers.
Yes.
So what is the difference between that and they've supplied, but they were not paid at this point in time? That has no difference.
Certainly, Honorable. I think
I'm not making any difference, and I don't want to, lay certain things.
Can we allow the auditors to clarify here?
Thank you very much, MD. That is for the payables now. Take me right down to receivables now. It's like Ferries is owing you a chunk of money, about 336 million plus. What are you doing to really get these funds from them?
Thank you, Honorable. I think Ferries is a subsidiary of the GP, and we've been providing financial support since it was delinked from GPTC in 2001. So what the board has also taken as a decision is to have the interventions in Ferries to be recorded either by way of a loan agreement, which is being done. So right now, any intervention that we're doing in Ferries, we record it like a loan agreement, whether paid or not, but at least there's relationship is established in terms of borrower and lender. but the likelihood of payment is yet to be tested. But there are plans in place. So maybe the GM can elaborate more on that when various issues have been discussed, to try to restructure the company to ensure that it is more viable and sustainable in terms of its operations.
Mr. Chairman, can we move now to the prior year management letter points that are not implemented? And we have a series of them here, which we go to page 34, where you have risk management. It was observed that risk management is an integral part of any entity and is required to ensure that any potential threat to the entity's success are identified and dealt with effectively and on timely manner. We noted with a concern that the authority does not have a risk management unit or process in place. What is the status quo and why is it not implemented until today?
Thank you, Honorable Chair. The GPA has now a fully functioning risk management unit, and a risk manager has been appointed and is housed within the audit department of the GPA and has taken function. A enterprise risk management policy is being developed by this officer and is being validated for subsequent consideration and approval by the board as a policy document. But a risk manager has been appointed.
Okay, thank you so much. Then let's move to 35, where you have the board audit committee meetings. During our review around the authority control environment, we noted that the board audit committee met only twice during the period under review. And yeah, and when you're supposed to meet on a quarterly basis?
Thank you, Honorable Chair. I think 2020, as was reported, there were some issues about the constitution of the board audit committee, and it coincided at a time when the previous board exited and there was a gap. So when the new board assumed office in January 2020, the decision was to have the legal mandate of the board already identified and a review of the 1972 Ports Act prepared and a board charter reviewed. So these were the issues that the new board decided that the legal mandate has to be established first before we go and look into the structures. Since then, the board audit committee has been in place, but it was a problem of reconstituting the membership. Currently, it has been done, but at the time of reporting, it was not fully functional, although it existed in structure in terms of the board charter, but the membership was the issue, as the expertise that was required to man the subcommittee of the board were ex-officio members from other institutions who their tenure in those institutions were also having issues. So that's warranted for that gap in that year.
But are they now adhering to the quarterly meetings?
Yes, a new subcommittee has been reconstituted, and rather than substituting, additions were made to the composition.
Okay. Thank you. We go to 36 also. We are made to understand that the internal audit department, pre-audit activities, for our review of the functions of the authority internal audit department, we noted that the department is involved in the process of the authority as they vet all the payment vouchers before payment are made. Follow up on the recommendation. We noted from our review of internal audit reports that recommendations were not implemented by the management as reports were mostly on recurring issues. Quality assurance review. The international standard for professional practice of internal auditing required for external assessment of the internal audit department to be conducted at least once every 5 years by qualified independent assessors and assessment team from outside the organization. From our review of the authority, internal audit, we noted that the quality assurance review has never been conducted for the department.
Thank you, Honorable Chair. All the observations are noted, and the internal audit has in its work plan to conduct the independent review of the unit. On the quality assurance, management has taken note of it, and we will implement the observation accordingly. For the pre-audit, management still is continuing with the practice of having audit pre-vet all payment vouchers.
Now, what stage are they in terms of implementation?
As I said, Honorable Chair, for the review of the internal audit department, it's in their work plan and it will be implemented. It will be done, the review of the internal audit.
Can we be informed about a specific deadline in order to?
I will report back on that, Honorable Chair. I don't want to make any guess in terms of timing, but I know with certainty it's in their work plan. But the actual date in which it is expected to be undertaken, I cannot tell at the top of my head, but you can provide the information.
Okay, I think these are very important issues, and we don't want to see them reoccurring, as they always paint you negatively outside. So that's why we need to have a definite timeline. How are you going to completely resolve this problem so that they will not keep on reoccurring again?
We will. But like I said, Honorable Chair, the practice of pre-vetting is still being maintained by management.
Okay.
Although there's a difference in opinion, but I think accountants would, there's a dichotomy between what is acceptable. But management is comfortable with having the internal audit pre-vet all payment vouchers.
No, can we hear from our auditors? That's not their function. Yeah, the referee and the player.
Yes, it is not an Honorable Chair, but like I say, professional accountants have this dichotomy, which as management, we have also done our consultations and we talk to accountants. So there's two schools of thought on this issue.
Okay.
Which one to accept now? But I'm saying management is comfortable with the practice of having internal audit pre-vet all payment vouchers, because it gives that level of also comfort and assurance.
But do you have a special manual that take care of the internal audits?
Okay. They have an audit manual that's all right, that they work with. Yeah. The audit manual. Being pre-vetting.
Yes, it is.
Yeah, it is, but I can vouch here that the trend is that it's going to change, because they've all been trained in IFRS, and the whole idea is for the port to be fully compliant with IFRS requirements. And once we are in full compliance, we will deviate from that practice. Like you said, you cannot be a referee and a player at the same time. At least as far as the board is concerned, yes, the management may be comfortable, but in our oversight responsibility as a board, we are not. And we want the management to take responsibility for the decisions they are taking, because there are rules that are guiding their work. So they don't need the internal audit to be there to guarantee whatever they think they're doing. They will do their work. If it's done properly, that's fine, we hope. If it's not done properly, then the internal audit should be able to pick it up. The issue we have now is about implementing recommendations of the internal audit.
Exactly.
By the manager. That's the challenge that we have. But we are trying to also fit that into the planning process. Okay. That all recommendations are going to be properly allocated to those who are responsible for their implementation, and it will be part of their performance evaluation. Thanks.
You want to come in, MD?
Yes, Honorable Chair, I would just like to repeat that there are two schools of thought on this, but in our internal audit manual, it clearly specifies that function of pre-vetting. So management is comfortable with the practice to align itself with one school of thought, which says pre-vetting is acceptable.
Anyway, I think we don't want to open up debate because these are specialized institutions that are there, and that's their recommendation. And I think now the onus lies with the board. Mr. Chairperson, you have a responsibility with your team. Since it is not part of the TOR, not about different school of thought, but this is what has been identified and recognized by the external auditors, and they are advising you. It's also very important to heed to the advice. So I want the board to sit and discuss over this issue and make sure that you make a stop to it. It's going to be very difficult for an individual to be a player, because I will not even blow whistle for my own fouls. So these are going to be issues if you do pre-vetting and you become a player and a referee at the same time. Okay. Thank you so much. Let's go to 37. Service rule book. The service rule book of the authority detail out all staff provisions and should therefore be effectively communicated to all staffs of the authority. As part of our review process, we review the personnel file of traffic clerk. However, we were unable to obtain any evidence to confirm that the service rule book was given to the staffs. Due to the necessity to amend certain sections of the service rule, which was already approved by the board of directors, it was deemed fitting to hold on to the distribution of the document to the staff until such a time that the amendments are made. Are you done with this?
Thank you, Honorable. This has been done.
Completely.
Thank you.
Okay. We don't want to see it in the 2021.
Certainly, Honorable.
Okay. 38. Performance appraisal. According to 0212 of the service rule of the authority, a comprehensive staff appraisal policy for the authority shall be provided, detailing the responsibility of reporting officers, timing of reports, the appropriate forms to be used, and the mechanics for implementing the appraisal scheme. The authority will ensure that the process involves all staffs. During our review process, we requested for the evidence of performance appraisal for Ibrahim Akinte, a staff of the authority. However, no evidence was provided to confirm that this was conducted. We were informed that only selected staffs are appraised when identified for training or promotion. Directorate of HR and Admin has performance appraisal as one of its core functions. We concur with the recommendation to have staff appraisal exercise at least once a year across the board. This will help management make informed decisions regarding the competence of staffs in the execution of the duty, the training gap, internal movement, etc. Performance appraisal exercise for all the staffs has been underway since 2021. So which means it has been resolved?
Yes, now the performance appraisal is being done for all staff. It was just that at the time it was done for selected staff that were identified for either training, promotion, or upgrading. But the recommendation is to do it for every staff, and the recommendation is being complied with.
No, we still have one. Yes. You want to ask a question? Yes.
MD, want to ask, how do you do the appraisal? Is it an individual personal appraisal, or you get down to field to appraise them through the HR officers?
There's a form, and our experience is that the form is very complicated, so we're still grappling with it. But the way it is done is that the appraisee and the appraiser would sit, and the staff would have the opportunity to participate in the process. And there's a column on which he is expected to make columns, and then HR will now supervise the process. Because HR will be in between, for example, a superintendent and a mechanic. And once they have been appraised, the superintendent is appraising the mechanic, HR is there as the independent party. So the appraisee has the opportunity to also make comments on what he's been appraised with. But what the board has also resolved is there needs to be a performance management system, that the targets are set beforehand so that every employee knows what you are going to be assessed on. So at the end of the day, it's like it's a self-assessment prior to the appraisal form being filled out. Like the individual staff would have to self-assess whether the targets that have been set, that if I have to remove 5 tires maybe in 1 hour and you are not able to do it, what was the reason for that? So the board has taken another totally different dimension, which is giving the performance appraisal system more emphasis. And this is becoming now a performance management system. And all the more reason as government is envisaging to enter into performance contract with the GPA now. So this gives more relevance to have this performance appraisal system in place. But the challenge is, Honorable, it's something that the staff are now being sensitized upon, because it's something new to a lot of the staff. Although they are aware about the concept, but how it is applied with objectivity is really the challenge now. But we are doing training, both at the level of management, senior management, and a cross-section of staff on how the whole performance management system should be introduced. But filling the forms, there are challenges. We can fill the forms, right, and do everything, put it in the files, but how effective is the system of assessment? So the board has decided that with performance management system, even before the appraiser comes, the appraisee himself must have been in a position to appraise himself, like a self-assessment, to know whether you have met the targets that were set from the beginning or not. Well, not all of the form, but part of the form, to show what has been observed in the exchange is made known to them, especially where there are deficiencies or why certain targets were not met. It may have been that maybe the resources that were supposed to be at the disposal of the staff were not there. So they are given the opportunity to also review the assessment that was done. But like I said, Honorable, it's something that the board is engaging the management, because it's a very dynamic and a new process that we are taking altogether.
Thank you very much, MD. Looking at the Port Authority, how often do you conduct staff audits to look at the number of staff working under you to ascertain that is it so much saturated or not? And what can you do internally to make sure that efficiency and effectiveness is actually gained at the end of the day? Because you have a target and you're working toward a target. And do you thought it wise to conduct any of this exercise?
Thank you, Honorable. The HR audit was done in 2019, and the report was presented to the board in December 2019, that same year. And it was prepared by a local HR firm called Senghor Associates. And the report came out with optimal figures and recommendations that from all of the job titles and the work streams that are available in terms of the business processes in the port, the report observed that the port has personnel in excess of its requirements to about 233 thereabouts. So excess, yes, excess numbers, yes. So what has happened is the key departments were also identified, and it involved mostly security staff, about 113. He had another category of job titles called operators and key level staff. These were the main areas where there were excess staff. So what the recommendation was to do an exit strategy. But management thought that because these are HR issues and very difficult, one would have thought that to look at the options for exit, you will look at the last in, first out. But we realized that they are mostly relatively young in age. And if you have to work out a severance package, it would have cost the authority a lot. The other was to prepare a retirement plan, 5-year retirement plan, and give the staff who are closer to retirement the incentive to exit the scheme. And then the third option was to freeze employment on any new job titles, particularly in these 3 areas. So management has successfully achieved that, and for the past 3 years, the payroll, in terms of numbers, has gone down. Thank you.
Thank you very much.
Mr. Chairman, thank you so much. Honorable members, can someone move a motion for them to stand down for 2 minutes? We discuss.
I have a motion.
For 2 minutes, 5 is too much, 7.
No.
Yeah. Thank you so much. Mr. Chairman, we want you to excuse us for 2-3 minutes. We want to have some internal discussion and bring you back. Sorry for the inconvenience, yeah?
Yeah, so there are some people that are waiting for me. I will take a minute.
Okay.
I will tell them 5 o'clock. They've been waiting.
Okay. Now, the issue is like,
No,
we have another one.
I'm waiting because my contract is 5 o'clock. So after 5, I'm leaving.
We have
Ferries
ferries.
can be scheduled another day.
No. Thank you so much, Chairman. The House resumed. We are having some discussion with regards to the report that are before us. And honestly, we have seriously debated over the issue of GPA. And even if you look at the auditor's opinion, like page 8 of the financial statement where you have the opinion, in our opinion, because of the significance of the matter discourse, in the basis for the adverse opinion section of our report, the accompanying financial statements do not give a true and a fair view of the financial position of the authority as at 31st December 2020. So if you look at this thing, and the reports contain so many interesting areas, when you look at the issue of adverse audit findings, it's up to 9 of them. And you go to the prior year that are not implemented, it went up to 20 of them. And based on these issues, I think we are partners in development. Our job here is to look at any issue that are of inconsistent with the development agenda of the institution, to flag it, to put ideas together to make sure that you live up to expectation as we want to attain value for money. So that is the whole purpose. That's why as a special committee, standing committee, that is tasked with the responsibility to conduct this oversight. So I believe there is no point to completely reject this thing. But we resolve into adopting this report, but with certain recommendations that we want to put on. So like we're talking about the adverse audit findings, which 9 of them are in the reports, but we are expecting, because some of them I think have been resolved the way due to the engagement we did with you. We are reliably informed that some of them have been resolved. So we want by third quarter of 2023, at least 75% of those adverse audit findings are resolved. And we are expecting an implementation report from GPA. The second part of our recommendation would have been the prior year, 20 of them that are not implemented. Some of them are technical in nature, and it's need a lot of engagement, and different stakeholders need to be involved. But the same third quarter in 2023, we're expecting 50% to be resolved. So that by the end of 2023, we want all these things to be clear in your book, to have a fresh page. So that is our recommendation. And on that note, we want to hear something from the chairman, whether you are in agreement with our recommendations.
Thank you, Honorable Chairman. I suppose I can say that our interest and commitment converge. We are working towards that. We are aware as a board of these issues, and we have the additional requirement to enter into a performance contract with the government come next year. And all these issues need to be addressed if we are going to deliver on that performance contract. Where we will need your support in particular is to look at the act under which the Port Authority was established. It's really archaic. It doesn't allow for even most of these things that, or I should say it could be part of the contributory factors to some of the problems that we are faced with. And the earlier it is revised and modernized, and the better for all of us. But I think these targets are reasonable in the sense that there is commitment. What I've realized for the past 2.5 years being in the port, the complexity of the personnel that we are dealing with. You've just heard the MD saying that it is overstaffed by 235, and, well, we've not talked about ferries yet. And dealing with personal issues under the circumstances we find ourselves is kind of sensitive. So we will also there need your support and collaboration in whatever that we are able to recommend in order to be able to move ahead, because it would have some maybe budgetary implications in the process. But we would prepare a work plan against all these other recommendations. And as we mentioned, part of our performance management system, we are going to assign it to individuals that are going to be evaluated on the basis of the extent to which we are able to fulfill this. And we will share that with you, inshallah. Thank you.
Thank you, Chairman. We had your response. And I know currently, as you rightly said, we have Directorate of State-Owned Enterprise at the Ministry of Finance that will be contracting you in terms of performance. I think that is one thing, and I really concur with you. If you look at the GPA Act 1972, it needs to be reviewed. Some of the provisions might be obsolete, but our doors are open. Like if you can come out with the initiative, we are very much happy to accommodate you to go in for the review of that aspect. And the other issue, currently we are in receipt of the State-Owned Enterprise Bill that is before the Parliament. And maybe the first and second reading is coming this particular session, and it's going to be referred to us. And I think during public hearing, we will identify various stakeholders to come and ask their opinion with regards to certain provision, whether they are progressive or they are not. I think if we have the commission, that will also look at the governance issues and that of the financial issues of the state-owned enterprises will really improve significantly. Other than that, we are good, we are adopting, and I will allow my deputy to also make some statement before. Okay, let the MD come.
Thank you, Honorable Chair. As the Chairman of the Board has mentioned, we have taken note of the recommendations, and which we have accepted, and we will try to deliver on them. Just one comment on the basis of the adverse opinion. It's more or less an update. The Board has taken a decision that the relationship between GPA and its subsidiaries has to be redefined, and action has already been taken in view of the envisaged privatization of the port. So what has happened is the Ministry of Finance has been engaged because they hold 20% shares in ferries, whilst GPA holds 80%, as mentioned in the report. So we're trying to do a recapitalization of the ferries shares to the extent that we believe that 100% should now revert to the GPA. So the intention is, as the GM may elaborate more in his report, is to restructure the ferries and then have a severance package for staff that will be excess of the needs of the ferries, and then ultimately to have the ferries as a standalone, because the parent-subsidiary relationship calls for consolidated accounts, and if you consolidate accounts, in science, I believe in maths, plus minus equals minus, and no investor will be encouraged to invest in a company that the books are having a negative value. So that's with the ferries. With the shipyard, there's also work in progress to attract a private partner. So very soon, the shipyard will also be removed from the books. For the Banjul Fisheries Jetty, it was an MOU, as rightly mentioned in the report, 2001, 1 year renewable. 21 years down the line, nothing has been done. But what we have observed as a management is the revenues from the Fisheries Jetty can cover their operating costs. So it will not be very critical to hive off the Banjul Fisheries Jetty from the main GPA. So these are all work that is being done, and we have engaged the relevant authorities in writing. So we believe that come next year, the relationship between GPA and these related parties will be redefined with a view to having improvement and also ensuring job security, because it involves HR, and staff are a little bit in consternation as to the fear of the unknown, what is expected, because normally the fear is that when a private man comes, people lose their jobs. But the objective of management in all of these engagements is to ensure that there's job security. If anything, opportunity to create new employment. Thank you.
Thank you very much, the chairman and also the MD. To be honest, you have everything you need to redefine GPA as far as this committee is concerned. This committee is a standing committee in the sense that it's not just recognized by the standing orders, but the constitutional provision that this committee established. And looking at the composition, you have the head of government business in parliament in this committee, and that's myself as the leader of the house. So I was so amazed that the chairman is thinking in line to bring progressive thinking, that is to revive the existing legislation and to look at the existing legislation, how best we can peruse through it and tidy it up so that it could be in line with the current reality. And I will be happy to receive such initiative by government to make sure they bring a bill to repeal the existing act to address this issue. And I have serious issue of waivers, and I think in certain institutions, in fact, our laws demand that subsidiary legislation is that any waiver done by any ministry should be subjected to parliamentary approval, because these are revenue that the state is foregoing. And if revenues are to be foregone, it needs the second arm of government, that is the oversight institution, to representative who you collect tax on our behalf should be in the picture. And if that is done, we look at all those leakages, how can we try to close all those leakages to enhance effectiveness and efficiency. And I have a reason why I also pose the question of issue of the staff. And we need to have a sizable number, manageable number, trainable people as well. They should be trainable to make sure that they understand the role they are really playing. And if these things are done, I think there will be a new phase of GPA. And of course, the reason why we are established to pay dividend to government would be realized. I thank you so much for indulgence.
You're welcome. Thank you. Mr. Chairman, we are indeed very much happy. I just want to inform you that the recommendations we give you need to be submitted to us, the implementation report of these two recommendations, by the third quarter of the 2023, that is September, end of September 2023. Other than that, we really thank you so much for your cooperation, and I believe the GPA is on a firm footing as far as the purpose of the establishment of the GPA is concerned by paying dividends, which we are made to understand the last 2 years you are paying dividend, which we really appreciate, and we know very well it's established based on these 3 areas: maximize profit and pay dividend that goes to the consolidated fund for it to be invested into the productive sector of our economy. And the other aspect is in terms of staffing. If, like you can look at it, you are overstaffed seriously. So the central government cannot do it alone, but we need a better capacity to accommodate, especially in the youth sector, and also provision of service, which you are in line. But you have a lot of job to do in terms of regulating. And I really want to thank the external auditors who are always flagging you, looking at you from a different angle, in a perspective whereby if you are off the track, they will just tap you over. You are not on the track, come on board, come on track. I think that is very important. We really appreciate the job you are doing. And we expect the usual cooperation will grow from higher height. So on that note, we thank you, and GPA, you are now allowed to leave. Then we will take up with the Gambia Ports Authority. It's the same, huh? Okay. No, it's the same. You know, we are having a separate report, and we want it to, it's going to be treated differently. Technically, we are done with GPA. Yes, Madam Sangare?
Like the external auditor.
Yes, and even the GPA team, if they want, they can go. But if you want to stay, no.
No, I mean, I agree with you.
No, the issue here is, As far as we are concerned, we know GPA and ferries are two separate institutions. Even whereas there is these shareholding issues there. But that's why they have an independent report that is different from the GPA. So as far as our treatment are concerned, we are dealing GPA separately alone and ferries separately alone. Even whereas you have that common understanding, is this we have the same board that is taking care of them. But when you come to the management, it's different. No, it's okay. If they are good to stay, then we can start. Mr. Jobate, you are free to stay. Since you are two sides of the same coin, completely inseparable. But as we go forward, moving forward, there's this possibility of trying to allow ferries to be completely independent. Where are my people? Billy and this guy. Can we go to the management? Let's go to the management straight.
Yes, yes.
Okay, no problem. Yeah, okay. He said he's tired. I mean, pardon? Yeah, the management. We go straight to the management later. So I went to, for them, Mr. Chairman, thank you so much. We are coming into the second edition of the consideration, and this time is the ferries, not GPA. As we are in receipt of all the reports, we went through it and we have certain areas, though ferries are a smaller institution compared to GPA. So we go straight to the management letter, page 5. We are also looking at issues of adverse audit findings. So you have cash and cash equivalents. Observation: the following was noted during our review on the cash and cash equivalents of the company as at 31st December 2020. Trust bank account. Trust bank account, Banjul. Overdraft facility letter not seen. During the course of the audit exercise, we observed that the trust bank account, Banjul, with an overdraft closing balance of 245,554 for the current year. We requested for the overdraft facility letter, but this was not provided by the management. B, Standard Chartered Bank account. During our bank reconciliation review, we noted a company's bank account at Standard Chartered Bank, Basse, with a closing balance of $235,264. That is in the name of GPA and not ferries, but under the management of ferries. The management response did not. Yes. Can we hear from this?
Thank you very much. Take the mic, please.
Yes.
Use the mic. Thank you very much. Is it on, the mic?
Thank you very much, Mr. Chairman. This particular issue, we did not have an overdraft facility with the bank. So this is why the letter was not seen. This withdrawal was a temporary overdraft that was instituted or given by the bank But then it was like the account was overdrawn. It was not like something that was agreed upon. Because the institution have been banking with this same bank, and there was that understanding between the bank and the institution. However, it's been the flag that was done by the auditors were recognized and acknowledged, and then necessary steps have been taken such that such would not exist again. But as far as the query is concerned, we don't have an overdraft facility with the bank. This is Trust Bank. As far as the issue of the Standard Charter is concerned, probably that should be looked at from the governance perspective, the relationship between GPA and the ports. The ferries is a subsidiary of the Gambia Ports Authority. And many of the ferries account, you will find the name Gambia Ports Authority. Most of the time, it is Gambia Ports Authority in bracket ferries. So it does happen that this particular account does not bear the ferry's name, but then that is also noted, and then we will take the necessary step to make that correction.
For facility later. Yes, the GM, was this an overdraft? Would you agree that this was an overdraft that you've taken from Trust Bank Limited?
Indeed, it was an
overdraft.
The account was overdrawn.
It was overdrawn.
Yes, it was not an overdraft, but the account was overdrawn.
Okay.
So the bank allowed it, but it was a temporal, for a short period.
Okay.
To make some clarification.
Yeah, the facility later is what I'm trying to look at. So has he talked about anything concerning facility later?
Thank you, Honorable. So just for clarity, what happened is at the end of the year, they had a negative balance, and then we requested for the facility letter to establish how the bank was charging them, to recalculate if it was overcharging or undercharging, but this was not provided. Hence, we reported that there was no facility letter, because in the letter, that's where that's stated. But the account was in a negative, and the negative is overdraft.
I think there's sense in what the auditors mentioned. You understand there was not an overdraft, but there was an overdrawn. And that is, you've collected what is more than what you have in your account. But then also, in banking system, there's always a fee penalty or charges for that. And then during the period of the review, you could not ascertain what was the charges the bank was levying on you. Are we on the same page? Yes. Can you explain to us? Yeah.
Thank you very much, Mr. Chairman. It is indeed the case that the account was overdrawn, and because of the good relationship that exists between us and the bank, sometimes due to timing differences in the lodgement of funds and withdrawals, sometimes we're caught in a situation where maybe we have a certain check issued, and then the bank would notice that we don't have enough funds in the account. And then sometimes they will call to say that we have this check, and then honoring the check would mean that the account would be overdrawn by 100,000 or 150,000. So, if we have to formalize the arrangement, then it means we have to go through a whole process that would have taken, maybe weeks, because you would need letter from the approval from the board. You take it to the bank. So because of the good relationship that exists, the bank would normally allow us to just overdraw the account by a day or two, and then the inflows that would then come in would have taken care of that. And when it comes to the charges, even though what we're doing is definitely not right, But it's a lot cheaper sometimes than going through the formal process, because you would have made the application, they would have charged application fees and all other charges. So what the arrangement we have with the bank is, what they do is at the end of the month they would check, you know, like how much was overdrawn and for how many days, and they do their own calculations. The interest element is slightly higher than what they would normally charge, but then we're also making savings from not paying facility fees and stuff like that. But with all the other banks, this is not a possibility. You know, our accounts cannot be overdrawn. But with Trust Bank, sometimes in emergency situations, they would just allow for the account to be overdrawn.
Thank you very much. We are in appreciation the partnership that exists or relationship that exists. But what the auditors are interested in, they need a facility letter that will indicate the payment plan of this facility. Once you have overdrawn, obviously there are penalties or charges involved. The onus lies on you, the ferries, to write to the bank to provide a facility letter that will give a comprehensive update to the auditor that this is how we are going about the financing, and that's what's lacking. On the period of the review, they were not given that. That is the issue here. Are we clear?
Yeah, we're very clear, and we've already engaged the bank, and then we're working on
And what is the status now of this?
No, it's been cleared a long time ago. Maybe it was just for a day or two, but we've engaged the bank to have some sort of MOU to deal with such cases.
Okay.
So hopefully very soon we would have something formalized.
Let's go to page 7. Trade and other receivables. Observation. The following was noted during our review on the trade and other receivables of the company. Ex-staff loan balance, no evidence of follow-up. From our tests of control procedures performed on the credit control relating to the ex-staff loan balances, we noticed no evidence of follow-up to recover the outstanding balances due. Ex-staffs, we have them: Usman Samba, Joseph Limo Gomez, Sadio Aliu, Jadama Maka, and Musa Sedi.
Yeah.
These are there. Then you have B, non-moving receivable, companies no longer existing. Upon our review of the list of outstanding receivable, which has been fully provided for, we noted list of debtors still maintained in the outstanding receivables, which we doubt the recoverability due to the company no longer legally existing as follows. That, those are the ones that are there. You have Sibwano.
Okay, Sibano, right?
Sibwano.
Okay. And
Yajame. Spiritual Logistic and Gambia Public Transport Corporation.
Yes.
Can you update us? I don't know.
For the ex-staff loans, these people have left the services of the authority a very long time ago. So before we would write to them requesting for them to come and settle these loan balances, but some are outside of the jurisdiction. One or two have died. So definitely, during the period under review, no letters were sent, as rightly reported in the auditor's report. So, but as a management, we've discussed it, and we've resolved that we will be more aggressive in pursuing these people to make sure that these loan balances are paid. Then for the non-moving receivables, there are some companies that are no longer in existence. We've made full provisions for the writing of these loans, these amounts, and the auditors are advising that we seek the approval of the board to write it off from the books. I mean, all the amounts have been fully provided for. So we've already engaged the board to write off some of these balances that are sitting in our books, and then the chances of recovery is very slim. So with the issue of Yaya Jammeh, so we have different directives from the board, and then we are advised to engage government to make sure that we try to recover it from his estate.
Who is Yaya Jammeh?
The former president of the Gambia.
Former president.
Yes.
Okay. Okay. They said there is no evidence of follow-ups, and you just said that the chance of recovery is very slim,
Yes.
which means you resort to a waiver or to the board. And you see, this is getting too much. Yeah, there's loan here, you didn't put the control mechanism in place, they abscond, some died, some are not even within the jurisdiction. So the company is now, I mean, the service, whatever you call it, is now in limbo on how to get this money. And these things are now there. So what is your concrete, approach now to get money? Because I don't believe that we've made some follow-up here and there, then we cannot reach them. Let's rush to the board for write-off. It's not the way forward.
Okay, for the highest amount, I mean, that is a building loan, and then it's secured by way of a mortgage. So management would have to take a decision on now what to do about it, and then if need be, try to enforce on that mortgage. The other ones, unfortunately, it was for loans that were not properly secured. So with the untimely departure of the staff, there is no security in place for the company to fall onto. So when the matter was reported to the board, it was advised that we change the whole procedure and have somebody to step in to give some sort of like guarantee, so that in the event that maybe somebody passes away or absconds or whatever, then we will have a fallback position. So that we have already started doing.
You mean, what do you mean by the loans were not properly secured? We are talking about 24,933,034,000.
Okay, I was talking about the ex-staff loans. That was what I was referring to, that depending on the category of loans, certain loans don't have any security. Like if it is building, it has to be mortgaged. But if it is a special loan or a motor bicycle loan, then there is no sort of like security for the loan. So that was what I was explaining, that now we've changed the procedure to make sure that you have a guarantor, just in case that you're not there to settle the balance that is outstanding. The company would have a fallback position.
Which means there was no collateral for personal loans?
No.
Yeah.
And when was these loans given? Which year specifically?
Some of them date back some 10, 15 years ago.
Okay.
Okay.
Then let's go to page 9.
You want to take that one?
Before you respond, I am pretty curious. Like we talk about the former president, and the name is written Yaya Jammeh without any prefix to the name to qualify it whether it's a former president, and this was not done. So we can know, was this taken in an individual capacity or on behalf of the government? But you know, if you talk about the Yaya Jammeh, if ordinary Gambian sees this, you think that it is not the former president. And I know he took this during his tenure as a president. And why writing it in this way?
Okay. You want to take it? Okay. Thank you, Mr. Chairman. That comment is well noted. I think there is an omission there. If anything, it should be expressed than Yaya Jammeh. So that is well noted. Some of these monies were taken from the ferries on his instruction, and they were taken in the form of CFA. Sometimes he used to need CFA for certain transactions, and then he would send in to collect these monies, but most of the time he would refund the monies. But this is the case that the monies have been refunded, but this amount is still outstanding. With regards to the ship bow, this is a supplier in the Netherlands who was contracted to supply us engines. But the company went bankrupt, and then they were unable to supply the engines. Engagements were made to contact the company through the AGS chambers and through legal representatives from abroad to make follow-ups in order to recover the money. But after several attempts, it was difficult to recover the monies. And then it was also established through our agents that the company was bankrupt and then has also formally filed bankruptcy in the Netherlands. So as a result, this matter has been taken to the board for consideration. However, the board's position is all the necessary follow-ups that has been made towards this should be brought forward for further consideration. And that is why it is still there. But this is something that is still under discussion.
All right, so let's go to page 9. Where you,
For this one, when did they declare bankruptcy? And if that's clear, and when did you start making attempts to make follow-ups for your money? Because when the companies declared bankruptcy, partners across the world will be rushing to go collect their monies. So if you do not go quickly, you're not making frequent follow-ups, or you are the last to go for your money, probably you're not going to meet any money. So when did you start making follow-ups, and when did they declare bankruptcy? Thank you very much.
I think if I have not mistaken, if I can remember very well, this should be somewhere around 2014, 2014. And of course, we have followed this thoroughly with government stakeholders. And the final analysis, what we have found is that this particular company was doing business with Gambia together with Kenya and also Tanzania. And he's in the business of shipbuilding. But at some point, a delegation was sent to Holland, not specifically to follow him, but on a different mission. And then they had engagement, try to find out. Of course, fortunately, I was also part of that team. And then we went up to the premises of this, his location. But the information we gathered was the company is bankrupt. In fact, we found one pilot boat that was being constructed for Ghana Harbors and Port Authority. But then no work was going on, and then upon our investigation, it was also confirmed that the company is bankrupt and it was closed down.
okay, thank you very much. I remember, I think, are you satisfied with your question now? Right, so let's go to fuel management. Observations. A review was conducted with page 9. A review was conducted with regards to a fuel management to the ferry, and the following was noted. A, time sheet form not attached. During our review on the fuel delivery into the ferry, we noted that the following deliveries received in which there was no form attached to indicate the key information for fuel replacement. Is it replacement or replenishment?
Replenishment.
Replenishment.
Yes.
Replacements such as running hours and trips incurred from the last supply before replenishment. You have the Kunta Kinte, the Kainlai, 10,000 liters. You have, of course, the list goes on, you know. And later again said time seat form attached but incomplete. We know that the following deliveries in which the seats were attached but it was blank and not filled. These are all lapses of control mechanism, and we want to make sure that really fuel that have been used are actually used for the purpose they are collected for. Can you shed more light on this? Because this is really control lapses within the system. Can you throw light on that, please?
Thank you very much, Honorable Chairman. Indeed, we have a standard form for requisition of fuel. That form informs how much fuel has been used, how much is remaining on board, and how many trips have been performed by the ferry. However, there may be some forms, especially these ones picked by the auditor, that this information were inadvertently omitted. We accept that it was an error on the part of those charged to do the responsibility, but thereafter it has been noted by management, and then the necessary steps have been put in place to ensure that these forms are correctly filled out.
Okay. There has been also an observation on page 12, that is head count inconsistency in signature. It's been observed that upon our review of the head count exercise conducted by the internal audit, we noted inconsistency in signature during the count. We noted the same signature being used within the department is representing different personnel within the following departments, affecting 74 employees within the company. And this is really a big discrepancy. And in fact, this is really criminal. We want you to throw light on that. You cannot be using the same signatures again of different departments representing different personnel in the following department again. Can you also elaborate on that, please?
Thank you, Honorable. This issue has been identified, and management have also concurred with the external auditors that this is a practice that is unacceptable. This so happened that the auditing period was short during the headcount, and some of the staff usually would go on off for prolonged period, sometimes exceeding 1 week or 2 weeks. And as a result, the head of the units or the departments who were sure of the availability of those employees signed on their behalf. However, it was noted that this is a practice that cannot be accepted, and indeed this practice have never reoccurred after this particular incident. And management and all those involved have noted that this is not an acceptable practice. But it has nothing to do with fraud or any of this.
Yeah. Within your, within the ferry service, don't you have a sort of like more advanced, progress about this issue of signature? You can purchase a machine whereby you print, it captures you and know that this is the person that comes to the job here and there. And do you also have any punishment to reprimand people who are found wanting in doing this thing, so that there will be more of like deterrence in the future engagement? But going forward, has it formed part of the recommendation how to really get rid of this thing not to happen?
I think this was more of a misunderstanding than a practice, because it was believed that if the staff was not available, the head of department could sign on behalf of the staff, because the staff was indisposed. But then that will, of course, defeat the purpose of the head count. Because for the head count to be effective, we want every single staff to sign the document. But that did not happen in this case, and as I explained earlier, because some of the staff were on off and some were far. Because they are operating on safe duty. So some will work for, especially those around the provinces, they will work for a week or two, so that they will move back to their families, and have a prolonged of a week or two. So as a result, they were not available. Before they will resume on duty, they would have found the exercise completed. And as a result, their supervisors or their head of units were asked to sign on their behalf. And that was what was picked by the auditors.
I think they are concerned about the head count exercise. When they found people on the ground, they count, have the number in place, that this is the people. But in their investigation, they have now noted the same signatures again. Can I read again? It's being used within the same department, representing different personnels. After their head counts, those people who are there present, their signature has been used again to represent other people again in other departments. That is the issue here.
No, I don't think that is the issue. The auditor is here. What the issue was, those who were not present, somebody else have signed for them, like one person would sign for 2 or 3 or more persons. I think that was the issue. The auditor can clarify.
Auditor, can you just say like
Yes, if you refer to the table on page 12, it has every department: operations, security, admin, revenue. So what we are saying is, under these individual departments, we have the same signature, for example, 20 people. Under security, maybe 25 people, using the same signature, which defeats the purpose of a head count. So, I mean, that's all we are saying. Yes.
What the auditor said is right. So when this thing was brought to the attention of management, I mean, we agreed with the auditors that definitely this is not correct because it would defeat the purpose of the exercise. So management sanctioned another exercise for the staff from the audit department and admin to go around and then identify those people whose names were being signed for by somebody else to actually sign for themselves. And it's something that we've learned from. And then the department that is supposed to now do these head counts now know that they cannot accept even the director, the manager, or the supervisor to sign for anybody. Everybody has to sign for him or herself.
That was my question exactly. Whether they have redo the exercise, because it was an incorrect data. Yes. So which means to validate it, it has to be redone again. Yes. So for the practice, they've agreed that it was not a good practice. So, but it has to be redone again to ensure that they have a correct data in their books. But that's all.
This was 2020. There was one exercise done in 2021. And currently another one.
Okay, thank you. Can we have honorable member Jaite on action?
Moving to bonus policy on page 14. Eh?
Page 14, okay.
Yeah.
Bonus policy, right?
Yes, bonus
okay.
policy. For the period under review, we noted a total amount of 17,594,000 paid to the company's employees for bonus for the period under review. Upon discussions with management, we requested for the bonus policy to review the eligibility and company targets for bonus payments, procedures and allocation for employees, but it was confirmed that a bonus policy is not maintained. Yeah, management response was the payments of bonus by the company is contingent upon GPA achieving its performance targets, in which case bonus is paid from its profit after tax to all staff of the authority and its subsidiaries. Huh?
Yes.
Can you qualify this? Why, if there is no policy, why bonus?
No, I think there is policy, but it's not maintained.
Yeah.
Yeah.
Policy is not maintained. That means there is no policy. You know.
Okay, clarify. Do you have policy there, or the policy not been followed?
Yes.
Okay, I think this still has to go, has some governance element here. The GPA is proper Gambia Ports Authority GPA, but with 3 other subsidiaries. These subsidiaries, usually they don't maintain separate independent service or governance policy documents. All the subsidiaries depend on GPA's governance instruments. So as a result, we rely on the bonus policy that is maintained by the GPA. Ferries, the shipyard, the Banyan Fisheries Jetty do not maintain a separate bonus policy.
In essence, you are saying that your allocation of 17 billion was based on the GPA policy, not an internal policy developed by you.
Exactly.
Moving forward, would you recommend to have an internal policy to regulate this issue?
Yes, going forward,
Yeah.
we are doing that. And at the same time, we are also developing other instruments, including service rule, scheme of service, training policy, and all other documents that has to do with the ferries. But that is also in preparation of ferries being independent of the GPA.
Yeah, because we're concerned about the targets, eligibility to access these things must be detailed as a policy guideline. It really inform you or direct you or back you by a policy that this clause, this or section, this gave us the reserve rights to allocate this fund in compliance with A, B, and C. Then you will not have issue with the auditors.
Correct.
Yeah.
Yes, with respect to this bonus, and I want to ask a question. If during the period under review, did you pay any dividend to the government?
Not ferries, maybe GPA.
Yes, and if so.
GPA.
But,
GPA did not ferries.
But was any dividend paid as per, probably your operations? Has it paid any dividend to the GPA for it to go back to the government?
No.
Let me come in here. Yes, you have a valid question, but I think let's clear the air. The GPA subsidize the ferries to operate. I think the measure make it clear that we have a bond, sort of like an agreement that if we give you credits, you pay back. The dividend here is on GPA now to pay government, but ferries are being subsidized by GPA. Unless otherwise, you can put us through.
Yes, I can arrive at the objective of my question. What I was asking is, and you are a subsidiary, but you help the authority as well, isn't it?
Yes.
And what you pay to the authority, that helps the authority also to pay something as dividend, isn't it?
No.
Okay, help me, please. Help me.
No, well, ferries, they're losing money. They are losing money. Yeah, they because it's highly subsidized. So actually, it's carried by ports. So actually, what we spend is in their books as paid, but you will see that when you look at their personnel cost, it has gone up. It's almost what, 80%?
80%, yeah.
Of their revenue. So But because you're treating the staff as the same, you cannot separate them. It is very difficult to pay port staff bonus and don't pay ferry. This is the challenge I was talking about earlier that we need to resolve. We are working towards that. But that's exactly what's happening. So they could not even, they owe, you can see in the books that they owe GPA that they were paying, is it 50 million? A year or something, but last year they did not even pay. They couldn't pay. 2020 during this reporting period. So that's what's going on. It's a mess, but we have, that's why I would say let's look at the act again.
To be honest, I think, as the name implies, Gambia Ferry Services, there are more of service providers under GPPs of subvention. However, that takes me to page 15, high employment cost. Observation, upon our review on the various costs centered against the revenue of the company, we noted that human resource cost of the company as at 31st December 2020 accounted for 55% of the total revenue, which is on the high side. Details are below. Implication, personal costs amounting to over 55% of the revenue could have negative impact on the company, which could lead to major financial constraint on the company future impacting on operation if the trend continues. Recommendation, management should look into the above and ensure personal costs is managed at an acceptable level, taking into account all the key factors. I think we are still going back to the same issue, that there is need for a staff audit to make sure that we have a manageable size operating at the ferries, to make sure that you cannot have whereby your staff running costs, human resource, consumes 55% of your revenue. That's really, really unacceptable. What is your response to that, and then what plans are you doing currently to address this challenge?
Okay, so we are approaching this challenge, it's a two-pronged challenge. It's a two-pronged approach. One is we are trying to restructure the ferries such that we have the optimal staffing level. And two, we are also looking into reviewing the tariff such that ferries will be sustainable and not necessarily relying on the Gambia Ports Authority to be able to provide service.
Yes. Are you doing staff audits to ascertain the maximum number of staff you need as for your operation now?
So that will be done as part of the restructuring process. So that is one of the activities that will be done during the restructuring process.
Chairman.
Yeah, and we have another, it's not controversial, but say challenge that we will need your support, because the ferries have lost one of its main lines of earning money, the Bamba Tenda, Yili Tenda crossing, because of the bridge. And we think that investment is all come to naught, because those ferries cannot be used. And we think that it should be charged to the cost of the bridge, as affected the effect of the bridge on ferries. I don't think it was properly taken into consideration. And if we have to deal with the staffing issues, for example, we need government actually help the ferries to take care of that aspect, because yep, it is going to be a lot of money, but that should have been charged on the bridge. So maybe that is something you can chew on as members of National Assembly.
Thank you very much. That will be a huge debate. We should try to open that discussion here.
Where are
give the floor to member of
the staff that were working at Iltenda, Bambatenda. Where are they now? Are still working within the service?
Honorable, sorry, Honorable. That's out of on the discussion here. Lieutenant Matunda has never formed part of this thing. Please.
Between ferry and,
I'm just trying to caution that it's out of the discussion here as procedures demand. Thank you. Can you ask your question? That is the allowance component, page 16, please.
Progress, I'm not asking.
Moving to 7, allowances and compliance to service rulebook. Observations. The following were noted during our review on allowances and compliance to the approved service rules of the company. A, car allowance, which amounts to 11,344,000 annually. And it stated that car allowance is paid to employees that are maintaining a car in a roadworthy condition, as stated in section 0903 of the approved service rules. Furthermore, section 0904 further states that car allowances shall cease to be payable with effect from the date on which an employee ceases to own a private car. During our review on the personnel files, we noted inadequate documents in files to ascertain a review is done on an annual basis to ensure staff receiving allowances have a car in a roadworthy condition. It states B, payroll allowances not in the service rule book. We noted the following monthly allowances paid to various employees, but policy is not in the approved service book rule used by the company. My question is, are you aware that some of your employees are benefiting from this car allowance and they are without a roadworthy car? Are you aware of that?
Thank you, Honorable, for that question. We will do a verification exercise. This is usually done annually. It could happen that this particular year, 2020, this exercise was not performed. We are aware of the fact that 2020 has been a very challenging year for the ferry services. And of course, this could be seen in the performance of the country during that particular year on the review. But subsequent years, this exercise is carried out. And with regard to these allowances being in the service rule, as I said earlier, the ferry services do not have separate policy instruments. It is now that we have started developing those kind of instruments. So all the payments as far as staff emoluments are concerned is all based on what is contained in the GPA policies. And that is what we usually go by. But as I said, we have begun to develop some of these services to customize it to the operation of the ferries. And these things, the development of these instruments, policy instruments, are already at advanced stage. It's already been reviewed by management, and there was a evaluation workshop that was done, assisted by consultants. And now we are in the process of preparing it to take it to the board for final approval. But this could have been so, but then the necessary steps have been taken to ensure that these are not repetitive, and that they have been taken care of in 2001 and of course in 2002. 2021 and of course 2022.
Yeah, so going forward, I will advise that this evaluation yearly is done to ascertain the number of roadworthy cars. As such, we have a huge amount here, 11.344 million annually, and it should correspond to the number of employees being or in use of roadworthy cars, not to allow people to abuse this allowance issue here, because it's a huge amount here, and it should be taken care of. Yeah.
Point well noted, Honorable.
Mr. GM, since you are not having your service rule, but instead you depend on that of the port authorities, is this not catered for? Is this not catered for in the service rule of the port authority? Is this issue not catered for?
It does.
It does?
Yes.
So how did you deal with it? Hence, that is the document that you rely on in carrying out issues now.
I want to take that.
No, the auditors are very right, because when they did this verification, so what they looked at was the service rule of the GPA. So they noticed that some of the allowances that we were paying was not actually captured in the GPA service rule. So, and I would hasten to state that the service rule for GPA was last updated 2021. But before that, the last time they did an update was maybe some 2013. So it so happened that there were certain allowances that we were paying according to the approved budget that were not in the service rule of the GPA. But it has since been updated, so now all these allowances are now captured in the service rule of the GPA. And then the one that we're doing for the ferry services would also have it.
You know, a new rule cannot cater for the past. If you make a law today, the law doesn't deal with the past, right? So that should have been there, but it does not. So, but it doesn't cater for the past. So the issues that has happened with respect to that was foul. Because if it is not there, I mean, you have no dictates, you have no legal ground to do it, to do that. Maybe today you can have it, but yes, but then it cannot cater for the past. What has happened? You don't make laws today to deal with me, what I have things that I've done in the past. So this is what we looked at. But it cannot cater for what has happened. It can only cater for today, but not what has happened, and that's the query. But I think it should be better for them to have things. Hence, it is in the policy. I think it's better we lay a hand on the policy of the GPA so that we can offer ourselves with some of the issues like this. Yes, so where was?
Going down to
Thank you very much, Mr. Chairman. Mr. Chairman, if you look at 2018, the revenue was 393 million. And the reason for that high revenue that particular year was the arrival of Kunta Kinte, which is a very big fleet, and there was a lot of reliability as far as that ferry is concerned. However, the things begin to decline from 2019, where there was revenue decreased to 348 million. But this sharp decrease 2020, of course, COVID played a role, but we are not basing it completely on COVID. But one of the other key issues was the fact that that particular year, the lander was in bad state of repair. As a result, the tonnage or the load carrying capacity of the ferries were reduced drastically to very, very low level, as low as 30 tons. That was the maximum allowable load being carried by the ferry. Not because the ferries could not take more than that capacity, but because before you enter the ferry, you have to pass through the lander. And the landers were highly deteriorated at the time. However, by the end of 2020, the landers were replaced, at least the platforms and many of the components were replaced. As a result, 2021, the revenue was increased by 48%. This figures, statistics end at 2020, but if you look at the 2021 figures, you will see that we have come back after the lander was repaired, 48%. It's about 270 million. Huh?
I mean, 2020 is 200.204 million. And there was an increase by 48%. So I'm asking, what is the corresponding figure? What is the corresponding figure, Mr. Jawara?
Yeah. Yes, that's what
for 2021.
270 million.
Going to be added to 202?
Yes, 200.
So which means it's like 400 plus, very close to 500 million.
No. The
70 million is the additional income
in addition to this
2021.
using
2020.
as the baseline.
Okay.
So an additional 40-something percent would translate to 270 million.
Let's go ahead.
Yes. So the reason for this low performance is one, because of the lander and also the poor state of repairs of the ferries. And also certain stations were also closed. The Barajali station was completely closed. The Basay and Fatoto, Basay was closed, Fatoto the same thing, as a result of the construction of the bridge at Fatoto and also at Basay. So because of that, the revenue have sharply declined. But as I said, we have embarked on repairs of the craft, and as a result, this has been turned around, and the revenue, instead of decreasing now, is increasing. Yes.
You mentioned that some crossing points were closed.
Yes, indeed.
right?
Yes, indeed.
One of them, the Barajali one. Barajali.
In 2020, yes.
In 2020?
Yes.
Well, is it still operating?
It's operating now.
Okay. And what led to the closure of the Barajali one?
Because of the poor state of repairs of that particular ferry. In fact, all the 3 provincial ferries that were acquired in 1994 were all brought in 2021 to the Banjul shipyard for repairs. 2 of them were repaired and then taken back into service. And that includes the Barajale and the Kauru ferry.
Okay.
Yes. GM, I want to ask the issue of Landa, because it's like there are still some issues with it. Because I could remember we were crossing, as members of the National Assembly, it was our vehicle, in fact, who was asked to come and to make sure that, the ram goes down a little bit for ferry to have a space, then the people will come down. So I don't know what are the issue, steps that you take to remedy that, because it's still an issue, even though it has, there are a lot of improvements.
Yes, indeed. During the installation of the RAM, there were some issues that we had with the design of the current RAM. And as a result, there was issues around the installation. The former platform that was there, the design is slightly different from that. But because the station, the Banjul Bara, was completely closed, it was very challenging to be able to do that correction at that material time. So we had to improvise as engineers to be able to install that RAM and have it operational. So it is working, but then it's not working in optimal condition. So there are extra works that needed to be done. And we are working towards it. We are trying right now, getting all the necessary material. Of recent, some of the motors have been installed already. They are already in the lander. The cables, necessary cables with the correct lengths have also been acquired. We already have those in stock. But there are certain areas, especially the side rollers and also the foundation, that also requires rework. So these are all being worked out to be able to resolve this situation. But it was also the critical nature and the pressure that needed, that the work was undertaken during that particular period when the service was completely closed.
Has to be worked on as soon as, because I could remember we were crossing. We were struggling to land, and some boys were also struggling to jump on to the land, and before the ferry, that it could be disastrous. To get down of the ferry. So when those issues happen, sometimes you become very frightened. You see 2, 3 boys, they were jumping while the ferry was struggling, to land. They were also forcing themselves. It can cost loss of life. So I don't know, at what level are you guys, in terms of remedying that situation?
As at now, work has started on that. If you observe before, when the ferry lands, a vehicle will be called upon to go on the ram, and the ram will go down. Now, instead of that, it is the other way around. But it's all a question of optimizing the lander such that the balance weights and the ram can easily is optimally balanced. So that's the stage we are. And then, as I said, the motor is already fixed. Once this new wire is fixed, that should be able to solve that situation. But we are there almost halfway.
Yeah, we are done. The operations manager is here. He's the operations manager. Technical director. Okay. You need to do something about that as soon as possible. Huh? Yeah, definitely.
Thank you, Mr. Chairman. Going forward, let's go to 23, and that is the last adverse audit findings. That's internal audits. 11.1, observation. A review was conducted on the internal audits And we noted both the internal audit work plan and the report are addressed to the general manager instead of the board audit subcommittee in line with the recommended corporate governance practice. Furthermore, we request for the board audit subcommittee meeting minutes, but none was provided for our review. Yes, can we hear? Can you react to that?
Yes, thank you, Mr. Chairman. As the auditors have alluded, the audit, the first audit is not yet integrated in the GPA sub-audit committee that reports to the board. Probably we have one board for GPA and also for FERS. But FERS has their own internal audit as well as GPA. The internal audit of ports is part of the board subcommittee, but the internal audit of FERS is not yet integrated in the board subcommittee. And that is the reason why the internal audit reports are sent to the general manager, but also the general manager also reports to the managing director of the GPA, who in turn report to the board chairman. So, okay, so this is under consideration, and as we move forward, the first audit will be integrated as part of the board subcommittee to be reporting directly to the board as it is done at the GPA.
MD, but this was flagged in 2020. And up till today, and you promised that it is going to be implemented as soon as possible. From 2020, and now we are at the tail end of the 2022. What effort have you put in place for it to start? Is it a difficult job to implement it?
No, the audit was done recently, not 2020. This is because there was a backlog of audits that needed to be done. So this audit was not done in 2020.
But the report?
This was recently flagged.
Okay, 2022 audit exercise was done recently. Can we hear from the auditor?
This particular one.
No, we just audited 2020 as of now. I think we're yet to audit 2021 once we get the financial statements.
But when was this audited?
24th, in August 2022.
August 2022.
Yes.
Yeah.
Yes.
Okay. But can you give us any deadline in responding to this?
The board chairman is here. We will discuss this and also together with the MD, and then we will implement it as soon as possible.
As soon as, you still have as soon as possible. But can we have a deadline?
We will submit to the for the consideration of the board in the next board meeting.
And when is that?
That will be in December.
December?
This year, yes.
This year, okay. Yeah, the minutes to be accepted.
For the issue of the internal audit, and your internal audits for ferries, who appoints the individual? Internal audits, personnel for ferries.
Okay, it depends on the level. For grade 6 and below is the general manager. Above that, it is recommended by the general manager, but they are appointed by the board, director and above.
What is the caveat, the recommended qualification for the internal audit of ferries, looking at the situation of the institution and the funds that comes to the institution? What's the highest qualification of the internal audit?
Our head of internal audit has a master's degree.
Okay. Thank you so much.
Thank you, Mr. Chairman. It is true that the Gambia ferry services was providing operational support and, of course, budgetary support to the Senegambia Bridge since it was opened in January 2019. However, there was no formal agreement with government for the ferry service to be paid a fee. As a result, ferry service was expenses its resources to ensure that the operations continues. And we have spent in excess of $110 million during the period from January 2019 to October 2022, when we formally exited the bridge. Though we have written to government requesting for a concrete and sustainable arrangement, but these were turned down, and finally the bridge was handed over to the Accountant General's department. So as a result, this could not be implemented.
MD, I think these are very serious issues. Spending a magnitude of 110 million on the operational cost of the bridge without any formal agreement, and up till today, they are unable to refund you that money. Did you write any formal request to the Ministry of Finance?
Yes, we did.
And you have copies of them?
Yes.
But the problem is there was no initial arrangement in terms of in terms of bonding, in terms of agreement. You don't have any formal agreement with them.
Yes, there was instructions, and ferries were engaged at the tail end.
And who instructed you, if I may ask?
From our land ministry.
That's your land ministry, Minister of Transport.
Minister of Transport, Works and Infrastructure, yes.
But are you not in place to tell them that the operation of this bridge contacts certain budget line in order to effectively do it?
Yes, they know.
They know.
Yes, we've sent the first bill, and then some amount have been paid towards that, and then there was some amount that was not qualified, and it was declined to be paid. However, the remaining balance have been, we have written to them for them to effect the payment, but until now, those were not paid.
Was the part payment inclusive of that 110 million?
Out of it? Okay, let the finance director.
The 110 million that Mr. Jawara referred to was what was actually spent on the bridge from the commencement of operation in January 2019 to October 2022. Mm-hmm. But sometime in August 2020, a reimbursement was made in the sum of about $19 million. So what is actually outstanding as of the end of October was about $91 million. Yes.
Thank you. DF.
I could remember we had a discussion with respect to this between ferries and that of the Accountant General.
Yes.
And there were resolutions made for them to go in-house and put things in order and update this August assembly. Yes, we are receipt of that report. I think that would inform us, of some of these details, because we all had a discussion here in-house, and there were some resolutions that you need to go, including under permanent secretary of Ministry of Finance and the accountant general, including you, and to go and have an in-house discussion, then put the things in order and update this August assembly. And they've confirmed that we are received with the report, and I think that would also inform us for us to assist them to see how best we resolve such issues.
I think that's internal. We'll sit over the report, discuss it, and then we call them for discussion. That has been done as we advised them. The report is before us. It's going to be part of our itinerary for us to sit over the report and look at it, what it entails. And probably we'll be able to take it up with certain things that you mentioned, especially in terms of refunding what has been spent, because that's a significant amount. Yeah. Okay, how about lease of land, Petrogas? During the course of the audit exercise, we noted management listed a land belonging to ferries at Esau to Petrogas for the period 1st December 2019 to 31st November 2029 for a 10-year period. We requested the board approval, giving management the approval to engage in such a long-term financial arrangement, but it was confirmed that the board approval was not requested by the management.
So, at the time, yes, but later on this was taken to the board and it was not approved by the board. So as a result, the company was informed and the contract, in fact, was rescinded.
Was rescinded?
Yes.
Okay. Can you go to 26, page 26? Obsolete stocks. Page 26. As at 31st December 2019, we noted an obsolete stock of inventory value of 10,586,044 boots. We noted the obsolete stock was not part of the stock take. Furthermore, during discussions with the management, it was confirmed that the item relates to parts for ferries that no longer exist, or the current engine model mounted are not compatible with these parts.
So, Mr. Chairman, these are items that came from the old ferry that was decommissioned, the Barra ferry.
Yes.
And also the Johe ferry and the Kanilai ferry, which have engine model changes in 2014 and 2013, no, 2014 and 2015.
Okay.
So as a result, many of these spare parts are only used by the ferries. So as a result, we have tried on several occasions to dispose of them, but it was impossible to dispose of them because those particular engine models are only used by the ferries.
Okay.
So these are mostly Caterpillar engines, the 3406 series, and then the old, that particular engine, in fact, is no more in production, it's out of production. So as a result, and those engines were only used by the ferries, just like the C12 now we have. In this country, we are the only company that is using that engine, and the Gpa. So these are purely marine engines.
Okay.
So they are different from industrial engines where the parts can be interchanged with other engines. But these are purely marine engines, and those parts are purely marine parts.
Yes, and how do you resolve this problem since this is the situation?
It is possible those that are metallic to be sold as scrap, but then
I'm not looking at the possibilities now. What is your strategic move? Because this has been a concern in your book. Giving a negative picture of your institution.
So the plan is to sell it as scrap so that we can free up space, even if we will not gain much value from it, but then the space will be available to store other items.
And when are you expected to do that?
For that one, we can do as within 6 months periods, that can be done.
Within 6 months?
Yes, 6 months, because it goes through a process.
6 months from today?
Yes.
6 months from today.
6 months from today, huh?
From today, yes.
It's okay. Okay. The second one that is not implemented, that's the crossing warrant. Trade and other receivables. From our test of control procedures performed on the issue of warrants by the Gambia Police Force, we noticed crossing tariffs were not indicated or recorded on the crossing warrant issue. And we noted some were without stamps.
So we have currently standardized the crossing warrants. So the crossing warrants that were brought by other institutions, now we have changed those to standard crossing warrants that is developed by the ferries. So these crossing warrants are given to all the institutions that uses the ferry, so that we also standardize it, so that we can standardize them as well. However, there is one thing that is missing, which is we do not put the tariff figures on those crossing warrants, and that is what we have to update. But as far as the standardization is concerned, that is done, and of course the stamps also is also done. But then the value of that particular warrant, that needs to be indicated on the warrant. So that's what we are yet to do.
I'm still concerned about the timing for fully implementation of this.
Before December, this will be implemented.
December is just at the corner.
Yes. It's just to put the amount there.
Put the amount there. Okay.
I want to ask this question. Yes. Yes, but I want to ask this question. Yeah. I want to know if there are institutions that cross the ferry without paying. If there are institutions in the country that crosses the ferry without paying any money to.
Thank you, Honorable, for that question. I think that is a very important and relevant question. This has been a challenge for the ferry service for a very long time, and then we have engaged stakeholders through meetings, through formal letters. Many of the stakeholders are responding. The Army is the only institution that is exempted from paying ferry crossing because of yes, if there is uniform, and also for military vehicles. So that has been taken care of, but again, we also provide them with warrants so that we account for every crossing that they are doing, so that we can cost that as well. Other institutions, the payments is still, the issue we have is the previous payments. But right now, what we are almost transitioning from these crossing warrants to prepaid coupons. So prepaid coupons have been introduced in 2021, and many, apart from the security institutions, all other institutions have been asked to buy the prepaid coupons before crossing. And many of these institutions have been complied with this. But as far as the security sector is concerned, there is still a challenge. However, we are working this out with them.
So as of now, they are not paying anything?
Yes,
security?
Some are paying.
Okay. He said the army.
It's only the army that is
The army
exempted.
in uniform. The army in uniform.
No, I can understand, but I mean those vehicles. Is it the army, only the army, or there are sister forces that are not paying too? Yeah.
We do have challenges,
Yes.
even from the civilian population. Some will come and they would not want to pay, but these are challenges that we encounter every day, and then we try as much as possible to enforce that they continue to pay.
Yeah.
And sometimes it's not very cordial, but we have to ensure that also every crossing is paid, because the ferries is not making profit, and the plan is not also to make profit, but also it should be operate in a sustainable manner, such that what we are receiving should be able to fund the cost of operation. And that is what we are asking for. But as at now, what we are collecting is not enough to provide the service. And this is why we always resort to going to GPA in order for them to fund that deficit.
Yes. My MD? Yes, I just want to ask you one question with regards to the warrants that are given to the military vehicles and some of the military personnel, and which you give, and you also take note of these warrants and quantify it in monetary terms. After quantifying it on monetary terms, do you send it to the government for you to be refunded, or you keep it for referential purpose?
We just keep it for accounting purposes.
Accounting purposes. So what?
We once sent an invoice and we got a very nasty letter that we should never send them.
And again, where can I ask this question? Where does the idea of exempting them from paying in every crossing point, where does the idea emanated from?
You mean the military?
Yeah, the military.
No, it's in the Gambia Armed Forces Act. Yes, it's in the Act.
Okay. But was the act done in consultation with the ferry service?
No, sir.
Or GPA?
No, this is an old act that's been there for, I don't know.
When, before I was born, huh?
Probably.
Okay. But do you make any effort? Do you make any effort to review your own acts in consultation with them and see how do you fine tune this thing?
Yes, that is in progress. But also we have engaged the military hierarchy, and then we had a series of discussion, and of course there was correspondence by way of letter. And as my colleague was saying, at some point it was not really very nice. But then the contention here was not for the military to pay or even their vehicles to pay. We did not have problem with that. What we had problem is army personnel crossing with their private vehicles and not wanting to pay. That's what we have problem with.
Okay.
And this has been a long negotiation with them, and we have still the challenges still persist, but then we would say there's still some progress.
Okay.
As we represent electorates, because I could remember on few occasions that we were crossing, and there are two gates that people use. It's a challenge in most of the day. Even right now, if you go to Barra, you will see some people, queuing at the main gate trying to enter, when other people for 2 hours, they were waiting for the ferry at the waiting room.
Yes.
And sometimes your security personnel are receiving cell phone, hello, who is the guy? That's my sister, that's my wife, that's my brother, and the person is left to go. and somebody's father is standing, not allowed to go. Somebody's mother, somebody's wife is standing. So what are we doing to regulate this situation? Because people will be standing there to say, ferry management, corruption will not end in this country. And it will be happen broadly. Like security personnel wouldn't even care to receive a cell phone and said, this is so and so person, and you allow the person to go. They won't even care. It becomes a normality to them, and because nothing comes out of it when it is done. If you walk from here right now, you go to Barra, you have a testimony of this. So what are we making? If you are you aware of this? And if you are, what steps are you making to ensure that anybody who pays, a fee for ferry, where you're supposed to go, you go to that place and wait? On conditional basis, one could understand. But people are queuing that they all want to use the gate that's supposed not to be used. And your security personnel are leaving them based on cell phone calls. Oh, I know you know them. That's very abnormal. And I think our electors that we are representing, who elected us here, are complaining on a daily basis. And it's important we submit that to you. Thank you very much.
Thank you, Honorable.
I think, yes. I think you've heard that yesterday they were talking about us not having a complaints mechanism. But that's something we also have to introduce so that people can complain and then we can act on the complaints. You see, we have to create awareness so that they'll be able to know and report. Now they have, everybody is a reporter now. They have their phones and their cameras and things like that. So when they report, we'll investigate. Because that's the whole idea. We know this. But it's just a matter of having the evidence so that you don't create, some of these things are plausibly denied. People can just come and tell you, oh, no, it didn't happen. Or if we make them aware, so when they complain, we will take that's where we are going, to be more customer-oriented, so that we will be able to get some cost recovery considerations. And there is also this matter of knowing how much our space is being used without recovering. It's like a subsidy technically to government. If we allow a vehicle occupying a space, it's a foregone earning to us. But we should be able to show that. It's just that when government gives a tax waiver or whatever, we will know that we use our ferry, but we did not recover. So somebody somewhere will know that, yes, this is monies that could have been given to the ferry but for constraints, we will take care of it. And when you review our act, that's the GPA Act, you will see the ferry aspects of it. All these things can also help us solve the problems moving forward. Thank you.
Thank you so much. Let's make progress. Page 27 on the fuel management, there is an issue of the policy. We noted the following issues upon our audit on the company fuel management for the year ended. The fuel allocation policy. We requested for the fuel allocation policy for the office, fleet, and personnel receiving coupon, but it was confirmed to us that the fuel allocation policy is not maintained by the management.
Yes, we agree with the auditors. In 2020, this was not maintained, but in 2021, we have a fuel allocation policy that was developed, as well as fueling procedure that is also in place. So we have the policy now.
Okay. Then we go to 29. That is social security loan agreement. During our test of control and further substantive procedures performed revealed no formal loan agreement or contract relation to initial loan amount granted of 30 million by Social Security. The outstanding loan balance as at the year ended amount to 12 million. It's not implemented?
Well, at the time, I think Social Security was so eager to support the ferry services and gave us this loan of $30 million. without any loan agreement. So it was picked up by the auditors, and they've made it an issue. But up to date, we don't have a loan agreement, but I can report that the loan has been fully paid for.
Has been fully paid for?
Yes.
When was it paid?
I think as at the end of 2021, the loan was fully repaid.
Okay.
Yeah.
That's okay.
Was this a loan without charges?
We attracted some interest. I think it was about 12% per annum.
And there was no arrangement for the 12%, verbal 12%?
Sorry?
I said 12% verbally?
Well, there was no loan agreement. We had minutes of the meetings we had with them, how much they pledged to give to the ferry services to improve the efficiency of the existing fleet. But end of the day, the loan was provided to us, but there was no loan agreement. Yeah, interest 12%. Yes, it was for a tenure of 5 years, so it has been fully repaid.
Then we have 28, trade and other receivables. Receivable balance of 17,553,225. During our test control and test of detail on the recoverability of trade receivable, reveal a balance due from SIP Bonnet has not performed, and further inquiries made confirm that the debtor is bankrupt and the balance will not be recovered. Considering this balance has been fully provided for, and we are of the view that the above balance should be written off, the provision accounted with a board approval. Is that implemented?
No, it's not yet implemented, but after the audit, we had a meeting with the board, and then the board has given us guidance on how to go about, securing the approval of the board for approval to be given for it to be written off.
For a rating, okay.
Yes.
Mr. Chairperson, I think this is a serious issue, and you have to work on this in the soonest possible time. Page 31, capital grant from Taiwan. During our review on the capital grant from Taiwan, there is opening balance of 28,376,158. We requested for the grant agreement for the further audit test, but it was not provided during the course of the audit exercise. This is not implemented?
It was also the case that this grant was given to the Gambia Ferry Services, and there was no grant agreement. So when this issue was raised, the Gambia government had already severed ties with Taiwan, so the company couldn't obtain anything from the Taiwanese embassy or from government. Yeah, there were letters.
Yes, I just wanted to say, a trust bank overdraft, no facility letter. We are from another place. A loan from Social Security, no arrangement, no agreement. Another one again, no arrangement, no documentation. I think that should not be a trend of an institution. And I think they should try as much as they can to formalize agreements, particularly if it is international. Because sometimes they will give you this, to their advantage. So let's see the documents for accountability purpose. They are very, very important. We can have a consistency of a public institution not going into formal arrangements, documenting, their activities with, institutions, in these consistent times, it's not acceptable, honestly. 3 times for trust bank overdraft, no overdraft agreement because it was emergency. Social security loans, no agreement. And it attracted 12% interest rate. You go to this one also, we constitute 28 million, no agreement. I think that consistency is not okay. Honorable Chair, so I think the management should ensure us that this practice will definitely stop because the year in year they will come, these things will be approved or amended or considered and they surface again. So it's not telling much about our work, in fact.
Yeah, I concord with you. Yes.
Honorable Mr. Chairman, I guess we need to explain most of these facilities were not solicited by the ferries or GPA. These were handled at a higher level as part of grants and loan agreements by the central government, where the ferries or becomes beneficiary. That's why it happens. For Trust Bank, that's okay. Like if you look at our cash and cash situation at the same time, we had monies to cover that. That overdraft. So it was not that they knew we had. If you look at the books, you will see that we had money tied up. It's just like it was just what we call an excess, a temporary facility to cover a situation. But these other, the Taiwan and the Social Security, it was not solicited by ferries. I hope you understand what I'm trying to say.
Okay. If I may ask, when actually was this grant contracted? Which year?
Around 2013, 2014.
Okay,
2013.
But currently, what is the status quo in terms of a degree of independence?
These things do not happen now. As far as we are concerned, any engagement that management has to do is all. Yes, even with GPA, we are now signing loan agreement.
There's a divorce process going on. Okay. All right. Yes.
I hereby move a motion that you stand down for 2 minutes. Yep.
Seconded.
Mr. Chairman, this session resumed. We have met as a committee to have an internal consultation in respect to the consideration, and we have agreed to adopt your report. We have agreed to adopt your report, but with similar recommendations that we demand from GPA. That is the issue of adverse audit findings and that of the prior year issues that are not implemented. And the same timing, end of September 2023, we want an implementation report as equal 75% for the adverse audit finding and 50% for the prior year audits that are not implemented. One of the mic is on, huh? Your mic. Okay. Yes, check. Yeah. Okay. Mr. Chairman, how do you react to that?
Now we have reasons for having our managers here. They're just telling me that it's doable, so we'll commit ourselves to that.
Okay. Thank you so much, Mr. Chairman, and the team, especially the two MDs from both ferries and GPA, with all the line directors here. And I really want to especially salute Mr. Prong from the external audit, who has done a very good job to using that particular lens to look at us if we are off track, and he will flag it for us to come on track. And I think this is needed, and going forward we will do everything humanly possible to improve upon these gaps in our books. I want to believe some of them are inherited from the previous years, and it's difficult to completely clear some of them. But as far as the management is concerned, you will do everything humanly possible to clear these things so that we can be on a very firm footing. These state-owned enterprises are established for a purpose, and that purpose needs to be realized by the citizenry. The value for money should be attained, in as much as the service provision aspect of it is key, but notwithstanding, we also have other areas to look at it, especially employment aspect of it, and also paying dividend as GPA is doing. We want all the PEs to be like that, to be annually coming on board and paying dividends to the government. And this will also help a lot in the area, or in the area of investment into the productive sector, so as to work on in the recruitment capacity of the youthful population of this country, which, if you look at it, and this will be able to address some of the issues related to the backway syndrome. Because the reason why people are leaving the country, we have limited green pasture in the country, and that's why they take that dreadful journey. Some of them, unfortunately, die along the way. And there's this threat that most of them will be deported back to the Gambia. So we expect the state-owned enterprises to be very vibrant in that particular sector, especially in the area of recruitment. So other than that, we really thank you, and we believe that our relationship will be cordial with you. This is just the beginning. We have the whole 4 years ahead of us that we'll be having an annual engagement with you in this type of areas. And not only stopping there, our next batch of oversight will be coming to your institution to see what obtained there, so that we can have a frank discussion with you and see what can be done for us to improve our performance. Other than that, as I told you also, the commission bill is before the parliament and is going to be committed to us. We will look at it technically, and we are going to draw an itinerary time frame to invite certain institutions and certain figures to look at the bill together, whether it's progressive or not, so that we will do everything humanly possible for it to be passed. So to have that apex body that will look at the governance issues and look at the financial issues, not only for the external auditors or the audit to come and do it, but this will be continuously going on within the year to make sure that the state-owned enterprise becomes very vibrant. Other than that, we really thank you, and we want to wish you all a safe journey back home and to your various destinations. On that note, I want my members to move a motion for us to stand. Yes, do you have anything, Borcha?
Objective function of a politician is to maximize his chances of being re-elected. So we have to understand that. And we will work, because if we deliver, you will also deliver.
Yes.
So we are in this together. I just want to know, we understand that, and I look forward to us working together so that we can all leave behind whatever a legacy that we want to do. Thank you very much.
You're welcome. Can you move a motion?
I move that we adjourn.
Sign and die.
I move that we adjourn, sir, and die.
Any second? Yeah, okay. It has been moved and adjourn that we adjourn.
Yeah,
Sign and then. Thank you so much. You and your team are now really stuck. Sorry for the inconvenience. It has been a long day. And, yeah.